like change, right? They like the rules of the road as they understand them to be. And I sort of have some sympathy for the idea. I cover small caps, right, among everything else, and small caps constantly get jerked around by hedge funds in terms of, well, let's look at this CPI printer. This
and hedge funds did what?
Small caps, and we have these little arguments. And it's like, all that matters at the end of the day is what's the read through to the Fed, which can completely be opposite of what the fundamental signal should be. So I sort of have some sympathy for wanting to kind of get back to fundamentals. But at the end of the day, it does take time for markets to adjust.
Do you think that the markets could withstand a series of rate hikes at these levels? I mean, obviously they're pricing in a 50-50 split in terms of probability for a hike in September, but how much of that is already priced in, and do you think that
rate hikes will destroy this market, you idiot?
That equity markets could withstand, a response to that?
So look, I think you're threading a needle like with everything, right? We don't want inflation to get out of control. But if we look historically, and I always say, you try to stick to the numbers on these things. If we go back historically to 1990 and look at 12-month periods and what did the Fed do cumulatively over that 12-month period, the market does just fine when you have up to 4 hikes. Your average returns are about 13.7%. But if you do more than that, you start to really reduce your returns pretty dramatically. Similarly, on that valuation model I mentioned, if we start throwing in 4 hikes and push 10-year yields, up above 5%, push inflation to like 3.75 or 4.25, we're looking at flat to down equity markets over the next 12 months. So we can handle a bit, we can't handle a lot.
There's some line of thinking that, that the Fed could take back the 3 cuts from last year and kind of as a normalization move, we don't need the insurance, and then maybe that's within your band of not quite 4.
And I'll quote one equity investor I talked to maybe about like 4 to 6 weeks ago. So this is a little bit dated, but this was a large cap portfolio manager. And we were talking about disconnects, and I said, when I talk to macro people or fixed income people or FX people, they're all focused on rates. They're all concerned about the Fed. And I said, I just don't get the same thing from the stock picking crowd. Maybe that's changed a little bit now. But what this guy told me at the time is he said, of the 5 or 6 things I've got to worry about right now, the Fed is pretty low on the list.
Yeah, I mean, the
what
composition
what about the midterms? They matter?
The midterms, yeah, the midterms do matter, and you do tend to, now look, every midterm election year marches to its own beat. The timing is always different, but what you see on balance is that you get pressure on the equity market in the summer heading into the midterms. I just got back from Australia. It was a hot topic in meetings, and it tends to be a hot topic, midterms, policy, elections, when you're talking to international investors much more so than inside the States.
Lori, great to talk to you. Thank you.
Great to see you all.
All right, we've got a long way to go here on Squawk Box, and coming up, Oracle reportedly considering more layoffs. This after already cutting thousands of jobs over the past year. We'll give you more on the Oracle story, the trade, Squawk Box returns.
Oracle reportedly considering a new round of layoffs. Business Insider says some teams at the company could be cut by double-digit percentages. The company reportedly wants to reduce headcount by the beginning of September. Oracle cut 21,000 jobs between the middle of 2025 and 2026. That was about 13% of its workforce. This past March, the company told employees it would shed jobs as it faced investor pressure over raising debt for its AI build-out. Kind of a recurring theme there.
Look at that peak. 3 years made 31%, but it was $308, Mike, on September 15th of last
the top
year.
of that chart is cut off a little bit there, yeah.
It was so high that we clipped the top. It's down from 315 to 148 in less than a year.
But what have its CDS done in that
whisper
time?
of $900 trillion at market cap at that point.
Is this
Lost
again
hundreds of billions.
all a debt story? What are the swaps
That's
doing?
what I said. I was just going to look and see
Look
what
'em up.
I mean, it's a
five-year
good story,
CDS
but
has done.
it's also just like we didn't know Oracle was going to be positioned to actually collect from the AI spending bonanza, and they remade their whole game, and so that got revalued in a hurry. And then it was like the realities of how
They're building
how
a
you
5
actually
gigawatt
execute.
data center. I want to put that in perspective. I know,
Yeah.
gigawatts, we think about Back to the Future and 1.21, they're trying to get through back in time. 5 gigawatts is about 2/3 of New York City's daily energy demand. I mean, the data center that Oracle wants to build or is building in Texas is one of the biggest the world has ever seen.
Yeah,
Costs a lot of money.
Yep.
looks like
A
1
lot of
year
risk.
Oracle CDS way up.
Meaning the risk is up. Credit default swaps.
Correct.
What people are willing to pay to
For-
protect against a potential default is up.
Insurance costs.
Look at that.
Oh,
You
there
say
it
it
is.
and they just throw it up.
It's also a cheap way to short the stock. Like I think we should keep in mind that people aren't like, I think they're going to default on the debt. It's like there's so much debt out there, I might as well have a hedge on in case things sour, in case they get their credit downgraded, something like that.
Sure.
Meantime, moderate David Crowley winning Wisconsin's Democratic gubernatorial primary, narrowly defeating Democratic Socialist Francesca Hong. The Associated Press calling the race early this morning. Crowley has 39.8% of the votes cast versus Hong's 39.4%. It was a near victory. It follows a Senate primary win by Progressive Abdul Al-Sayed in Michigan last week. Meantime, the sister of late South Carolina Senator Lindsey Graham moving on her bid to replace Graham in the Senate. Darlene Graham and South Carolina Representative Ralph Norman will face each other in a runoff in 2 weeks. Graham is currently serving the remainder of her brother's term in the Senate. Meantime, among the other races from last night, we were watching Senator Amy Klobuchar easily winning the Minnesota Democratic primary for governor. The Republican side, Minnesota House Speaker Lisa DeMuth defeated MyPillow founder Mike Lindell, prominent White House ally who was endorsed by President Trump. I think the one takeaway, guys, somebody who has spent a lot of time in Wisconsin the last couple of months, is that the polls had pretty much Hong destroying everybody. No contest. Crowley had no chance. I saw him at single digits in one poll, and he won. I think there's a lot of takeaways. Leave that for the political shows, Mike.
Yep.
But we're markets people, and sometimes you look at prediction markets, polls, wrongest they could ever. Nothing has been more wrong.
Markets are going by his poll.
Right.
I mean, that's like the first stop. And so,
Well-
look, especially single state polls where you have kind of
So who are they
concentrated
polling, I think, is
population.
now the question.
Who's responding? Yeah,
Or
exactly.
who's responding? How are they reaching them? Right?
It's a mess.
And I love Wisconsin. Madison is its own thing.
Sure.
It's not doesn't represent the
That's-
state and vice versa.
Yeah. Well, coming up, President Trump promising to get involved in the fight over New York City's tax on second homes. That story is next. President Trump blasting New York City's new tax on second homes. In a post on Truth Social, the president said, "I'm looking to see if the federal government has any legal right to avert this disaster before it is too late for the millions of people who cherish New York and want to see it thrive, as opposed to becoming a filthy, crime-ridden, decrepit place of mockery and scorn." The tax on second homes valued at $1 million or more was championed by Mayor Zoran Mamdani and passed by New York State's legislature in May. A Staten Island judge temporarily blocked it earlier this week. In his social media post, President Trump said the tax was already costing New York City money by prompting some residents to move to places like Florida and Texas.
You know what New York City's budget was in 2007? $56 billion. And to inflate that, you get about $90 billion. The budget this year was $125 billion.
Yeah.
So the budget has more than doubled, and in real terms, it's up $35 billion. Population growth has been effectively zero. School enrollment has been effectively zero. And you just wonder, like, where's the money going? If they raise more money, where's it going?
The private sector net worth of New York City is up more than the budget, I guarantee. And that's where the back and forth. By the way, the president of the 50 states is concerned that people might move from New York City to states that voted for him. Interesting.
Doesn't he have? I think he's from here.
Yeah, exactly.
I'm
And has always
making
said
a joke
that this
off
is a crime-ridden, decrepit place, even though he is from
He
here.
was in Home Alone, right?
Yeah.
Yeah.
But wasn't that Chicago? Or was that?
That was
No, it's
here.
here.
That was
One,
here.
two.
That was
Home Alone
here.
one.
Sorry, it's been wasn't on my recent Netflix CD
called
order
Lost in
list
New
or
York.
whatever.
Yeah, it's called Lost in New York, and New York could get lost to the, tax policy.
So I am flogging myself now for not knowing that, Leslie.
It's okay. We give you a break before 7 a.m.
Please.
Coming up, the market for next generation short-haul flights, from air taxis to delivering human organs. We'll hear from the CEO of Beta Technologies. And reminder, get the best of Squawk Box in our daily podcast. Follow Squawk Pod on your favorite podcast app and listen anytime. We'll be right back. reporting a second quarter revenue of $14.7 million this morning. That's above the street's estimates of nearly $10 million for the quarter and up 146% year over year. Services driving most of that growth as the company invests heavily in scaling up its business. Phil LeBeau joins us now with a special guest. Phil.
Thank you very much, Leslie. Let's bring in Kyle Clark, the CEO of Beta Technologies, joining us from the company's headquarters in Burlington, Vermont. Kyle, let's start first off. It was a wider than expected loss for the quarter, but I think the important part here is you guys are ramping up certification. Do you have a better sense now of what that roadmap looks like to certification?
Yeah, great question, Phil. It's good to see you again. We've been working through the hardest elements of certification. Last quarter, I reported that there were some policy interpretation issues around the engine certification. Over the last 90 days, we've resolved that with the FAA, and we have a clear path forward with certification, which is, of course, a big step for our business. But I think it's important to note that, with the overall loss, the revenue was significantly higher than we had anticipated, and that service revenue and product revenue was organic, where we're getting paid to implement our technologies into other people's programs, and of course, implementing into their own programs, effectively planting the seeds for future revenue. And that's the track we're on right now.
IEPA certification, this IEPA program, which is the DOT essentially trying to condense the time it takes from beginning to end of certification. You've already done one of the IEPA flights with the DOT program. You've got several more that are scheduled here in the months to come. How much is that likely to, at least with your ALIA conventional takeoff aircraft, is that going to condense the time you see going from beginning of certification process to actually having the paper?
Yeah, so really, I don't see it compressing the certification timeline, but it changes the entire landscape and the rules of the game because it allowed us to start those flights. We moved to Hart on the 19th of July. That was the very first flight under the pilot program. We won more pilot programs than anybody else in the industry. And now we move on to our next target, which is revenue generating flights. So the key unlock here with the pilot program is that we get to fly with our customers in the real world while we get paid to do so, starting with medical, like we did with moving the Hart, cargo, logistics, and then we'll go on to passenger. So it used to be that certification was a hard line to enter service. Now we get to enter service before certification. And frankly, I don't think that's fully captured by the market yet. This pilot program is really amazing.
When you look at the market right now, Kyle, I would say within the last 2 weeks, there seems to be momentum building among investors to say, okay, I'm starting to get it. I'm starting to think that eVTOLs is not just an idea, that it will come to market and it will be an industry. Do you sense that momentum as well?
Yeah, 100%. I mean, look, the market's consolidating. We showed up in Farnborough. I'd say that we won Farnborough. We showed up with 3 airplanes. 2 of them are flying every day. Things are moving with GE. Things are moving in the certification. We've got these political tailwinds that are allowing the DOT and the FAA to move forward. And as you probably remember, Secretary Duffy, he could have gone out and flown anybody's VTOL and CTOL aircraft, saw a hybrid aircraft. He came here and flew 3 sorties with us in our aircraft. This stuff is real. And every day that we fly with customers, their eyes light up. We were over in Scotland. We flew all over Scotland's Highlands with Logan Air. And that resulted in a real order for an aircraft that we can build today and a mission we can fulfill today. And that really makes it real for people, and people are starting to catch up with it. I think you're absolutely right.
Kyle, one last question here. I think a lot of people are focused on the passenger flight aspect of eVTOLs, but that's down the road. More immediately, as you touched on, cargo and medical. Is the demand within medical far greater than people appreciate right now?
So I think it's an interesting stepwise approach that we've taken. Cargo, medical, logistics, reduced variables, singular customers, no complexity of passengers, and the certification burden is right-sized for the risks associated with the missions, especially in EIPP, which is the pilot program. So it allows us to start doing work sooner. My belief is by doing that, we will get to passenger, both CTOL and VTOL, faster than anybody else in the market. And like, this is what Beta does. We have been consistently delivering on our numbers, consistently delivering on our strategy, and we have not diverted into a series of other things. We've stayed focused. And what that's done is it allowed other people to buy our products, put it in their airplanes, fly with our motors, our inverters, do more miles than anybody else in the industry. And like, this is the pragmatic stepwise approach that starts with the market entry strategy of cargo, medical, and logistics, like you said, and that is mirrored throughout the business.
Kyle Clark. Thank you, Kyle, for joining us today from, looks like a sunny Burlington, Vermont. Kyle Clark, CEO of Beta Technologies, joining us this morning. Guys, I will send it back to you.
6:44 in the morning.
Pretty far north.
Does the sun come up faster in the north? Sunny.
Days are longer in the north in the summer.
Have some Ben and Jerry's ice cream while you're up there, baby.
Yeah, nice
Right?
town. It's a fun town.
It's that year and snow they have, it's hard to find.
Yeah.
Anyway, all right, coming up, we've got a lot more to do. We're going to hear from Star Podcast host Alex Cooper on her expanding empire. But first, speaking of sunny, let's get your AccuWeather forecast with meteorologist Anna Azalian. See what I did there, Leslie?
Good job.
Well, severe weather and especially flash flooding are still going to be the big issues for today. This time from Iowa down through the Ohio Valley and into portions of the southeast. Further south, it's just the same scattered thunderstorms we've been dealing with really all week. As far as our airport issues, less of them, though Atlanta, still spotty thunderstorms can cause some minor delays. Chicago, you're outside of where the most widespread severe weather will be, but still some thunderstorms can cause problems. AccuWeather for Business delivers proven superior accuracy with often earlier site-specific warnings that reduce false alarms and costly disruptions, so your business stays best prepared. Visit business.accuweather.com.
New this morning, Call Her Daddy podcast host Alex Cooper announcing her company Unwell will be taking in its first outside investment from Hollywood super agent Patrick Whitesell. The investment values Unwell at $500 million. Cooper and her husband, Matt Kaplan, co-lead Unwell, which is home to more than a dozen podcasts, a creative agency, a beverage brand, and much more. Cooper and Whitesell sat down with Andrew. Here you go.
Matt and I, with Unwell, knew that we wanted to take on investment at some point. Obviously, when we started the company, we put in our own money to start it, and we've been profitable since day one. So this decision wasn't about needing cash infusion. It was really about wanting to partner with someone who could help us go to the next level with acquisitions and investments. And we met with a lot of people, and the minute we met with Patrick, it was pretty obvious he was the one. Felt like dating. We were like, yep, this feels right, just because I think our goals aligned with how we see the business and the industry evolving and where we want to take it.
And did you guys know each other?
No, Matt's here too. I'd known Matt before, and then Matt and I sat down first and talked about kind of what they were doing, and it was already incredible. It's pretty obvious what Alex and Matt had built, not only in her own career, but what Unwell as a media company and how to diversify it already by the time we sat down. And so the idea was like, okay, where do you guys want to go from here? And then that led to a lunch with the three of us. And then we talked for about a year about like what it is, what can we do together, and that's kind of how it came about.
Okay, so what do you want to do together, and what does Unwell look like? I mean, we all know you as a podcaster, a video podcaster. You now have a drink business, you have a production company, and there's sort of a whole spread of businesses here.
Yeah, so to lay it out for anyone who isn't familiar, basically Unwell is a Gen Z female-centric media company comprised of dozens of, podcasts. We have a film and television studio, we have live events, we have consumer products, we have a charitable foundation, and we have a creative agency. And with this flywheel effect that we have built, we have now gotten it to the point where we're profitable, we're making money, and we now want to basically start to look at acquisitions and investments of whether it's new IP, different talent relationships, and companies, to be quite honest. But we're not looking to just gobble up a bunch of companies and call it a media company. This is a new media company and marketing business. So all of the acquisitions that we're looking to get into business with, it would have to make sense for Unwell as a whole of what we've built, which is primarily focusing on women as a demographic.
Okay, so when you think about acquisitions, give us some ideas of what is the kind of thing you guys would like to buy, and is that largely what the cash that's going to be infused in the company is going to be used for?
I think that's the beginning conversations we've had. Something that we've been discussing a lot is our creative agency. We created it this past year, and already to date, by the end of 2027, it is going to rival financially the podcast business, which is incredible to be able to say, right? It is extremely successful. And so we've been looking at the infrastructure we've built, the relationships we've already built. Now, how do we take it to the next level? We're looking at some creative agencies that maybe we could acquire that already has the infrastructure, more non-traditional, I would say, to add on to what we've already built.
A lot of people think of this as your company is your company, but they think of you as the face of the company. Do you see a genuine network of lots of different talent that lives in this world, and how does that work?
Yeah, I think it's case-by-case basis, right? We can acquire new IP, we can acquire businesses, we can acquire a creative agency, and we can work with talent. I think what's very obvious right now in the creator landscape is creators have the attention, and that is where the advertising dollars are going, which is amazing. But what creators don't have is the back-end infrastructure to actually grow and build. And then you have traditional media companies who are struggling with nimbleness and also just cultural awareness. And so Unwell is positioned pretty perfectly in order to help both sectors grow to their full capacity in a way that I think individually maybe they are not as successful.
We're going to hear more from Andrew and Alex Cooper in the next hour.
Coming up, a closer look at the chip sector and some names to consider for your portfolio. And later, the CEO of Kava joins us to talk earnings, the Cyclospora outbreak, and a lot more. Squawk Box will be right back. Welcome back. Joining us now to break down the latest chip headlines, and there are many lately, including Intel's stock offering and NVIDIA's partnership with some of Wall Street's biggest financial firms. Chris Casso, Wolfe Research Senior Analyst. Chris, good to see you. I thought there was a really great quote in the Wall Street Journal article this morning, talking about this NVIDIA partnership with all the financial firms. And they said basically, if you're a debt investor relying on compute power as collateral, I mean, historically, that's an asset that's had the shelf life of lettuce. And I'm just curious, in light of what we've been discussing with regard to the potential to kind of, give a financing opportunity and asset-backed security as, compute, how should we think of NVIDIA chips as a source of collateral in light of all that?
Right, and that was a good quote. I read that early too. So the whole premise here of collateralizing compute power is that there's so much power, there's so much compute power needed, there's so much money that's needed to be able to fund this. So, the good part of collateralizing this is it socializes it, spreads it out over many different players. There's two things that one of that you referred to is some of the concern is, what's the useful life of the chips, and therefore what's the residual value of those chips. And what NVIDIA will tell you is that the chips that they started producing 6 years ago, Ampere, are still in use. In fact, they're still 100% utilized now. So that's meaning that the history of AI is that the chips themselves have had a longer shelf life than they have in the past, and that's just because of the growth of AI. However, there's another part of this as well, which gives us some concerns, particularly with regard to the backstops that NVIDIA and also Broadcom appear to be applying to these. Is that the last 6 years, and certainly right now, we've been in tremendously tight supply. So the question is, if the supply-demand balance were to change and the industry were to be able to produce more, would the chips start wilting? And
right.
and that's the question for investors going forward. Yeah.
I think that's one key question. I think it's also if there is some sort of technological breakthrough that does make the older chips basically, worthless. How does that calculus filter through both to an NVIDIA or a Broadcom, which is backstopping this, but also those who are borrowing money?
And I'm a little less concerned about the obsolescence. And, it's the whole nature of the semiconductor industry. It's what we do is the next generation is significantly more efficient than the prior generation. You need that to keep the token costs coming down. So, when you factor in the assumptions for a data center, and we've done this analysis ourselves recently and made some assumptions for, how token prices will come down because new chips are more efficient, you can still get a very good ROI on those data centers, even while assuming that the token prices come down. And of course, even that old data center from 5 years ago is still going to produce the same amount of tokens as it did 5 years ago. It's just going to be the token price itself is going to come down. So it's something that is measurable, and that's kind of a more what I'd consider a more conventional risk. Again, the issue that you have and the less conventional risk that I think has to be considered here is if you build over capacity. And it's sort of the same thing as if you lease a vehicle and there's residual value of the vehicle. If it so happens that auto industry makes too many cars that year, the residual value comes down and the person providing the lease takes a bath on that. So that's one of the things I think needs to be taken into consideration. And where we're a little less comfortable is that folks like NVIDIA and Broadcom are providing that backstop. It would be preferable to me if the rest, the financial industry, the folks that are providing the financing took that. Now, however, it's also important to say that the reason why we're comfortable right now and for quite a while is because what underpins the bull case in the semiconductor industry is that we're not going to get to that supply-demand balance for a while because you just can't build the capacity fast enough. So it's a concern, but it's probably a concern for another day.
Yeah, and that backstop element, at least I'm told, was a condition for any of the finance firms to really come in and underwrite this. They kind of needed that guarantee there. Chris, thank you. Appreciate your time this morning.
Thank you.
It is 7 a.m. on the East Coast, and you're watching Squawk Box on CNBC. I'm Leslie Picker, along with Mike Santoli and Brian Sullivan. Joe, Becky, and Andrew are off this morning. Among the top stories, the July Consumer Price Index due at 8:30 Eastern. We'll have a preview with our Steve Leisman in just a few moments. Take a look at futures right now, though. Green across the board, a little bit of a bounce there. You can see the NASDAQ implied to open about 181 points higher. We are also watching the latest developments in the Middle East. Iran-backed Houthi rebels killed 6 people in an attack on a cargo ship in the Red Sea, while U.S. forces fired on a container ship attempting to breach a blockade of Iranian ports in the Gulf of Oman. Crude right now essentially flat. ICE Brent at about $89 a barrel, WTI at about 83. And shares of AI cloud company CoreWeave moving sharply higher this morning. Currently up about 2.4% actually. CoreWeave's second quarter revenue more than doubled versus a year ago. The company beat Wall Street sales estimates and reported a smaller than expected loss per share. It also raised its expected ranges for full year revenue, adjusted operating income, and capital spending. CoreWeave's CEO will be on Squawk on the Street at 9 a.m. Eastern time.
All right, we are about 90 minutes away from the release of the July Consumer Price Index. Our senior economics reporter Steve Leisman joins us now with a preview.
Looking for 2 in a row. Wall Street expecting a relatively benign inflation report following the unexpected decline we got in June, and that kept Fed rate hikes at bay. So that could mean 2 calm inflation reports in a row en route to the Fed's September rate decision. Here's what we're looking for: just 0.1% after that 0.4% decline on the headline. Core up 0.2, and then the headlines would both come down a tick from 3 to 3.4 year over year. And then year over year, core would be 2.5 down 2.6. But this is just one of a series of reports the Fed will consider, guys. This is one of the things that Kevin Warsh, I think, is trying to teach us, and I've been trying to teach for 23 years. It's not just one report. It's a whole series of things that create an impression. So you have tomorrow, we have PPI, tune in for that. And then we have on the 26th, we have the more important PCE, which the Fed follows. August payrolls come on the 4th of September, and that's followed by another CPI report that happens September 10th, 11th, and then the PPI report, and that's all en route to the FOMC. So the road to the Fed decision is quite a long one. Before the June data, headline inflation had been pushing upward, led by higher oil prices, but also seeping somewhat into core prices. That's that rise in the orange that concerned several Fed officials who were already anxious that the Fed had been missing its 2% inflation target for 5 years. Since Warsh took office, inflation expectations measured in the tip markets, they have eased. You can see there, suggesting either some confidence in the inflation outlook, by the way, decline in oil prices as well, weakness in the economy, or belief perhaps in Fed Chairman Kevin Warsh's absolute promise to deliver 2% inflation. So the Fed's decisions to pause at the July meeting, it could end up to turn out to have been the right call if by September the economy racks up 3 straight reports of improving inflation. Fed's going to pay close attention to the underlying inflation, not so much to the headline number.
For sure, and Steve, there's this other dynamic, and PPI maybe is going to bring this to light, where you've had this kind of switch in terms of PCE measured inflation and CPI, right? CPI looking more benign than it has in the past relative to
it's flipped that way. It used to be the other way around.
Used to be the other way around, and so the question is like, what's the signal? What's driving each one, and how does that matter for the Fed?
I think you got to step back. Now, you know, what Warsh is trying to do is he's got this committee or this task force that's trying to look at, is there a better way to measure inflation? I would put a little caution there as a guy who works with a lot of the alternative data. I'll just give you an example. You remember the CNBC NRF retail monitor we did this week? We had to look at it. We didn't do this, but Prime Day moved from July to June.
Yeah.
That messed up the data. There's all this stuff. If you ever want to,
Amazon Prime Day messed up the data. It's that big.
It's that big. It's that
big.
important on a monthly basis. It changes the year over year. The year over year rate went from 10% plus 10% in June. Well, because you think about it, last June didn't have Prime Day.
Yeah.
That June did. This July didn't have Prime Day. Anyway, I don't want to talk so much about that particular thing. It just tells you that there is no panacea in the private sector data. I think one of the things Warsh wants to look at, which is super cool, is some of the direct big data that's out there from retailers. We get credit card spending data from Affinity Solution. You had Bank of America on yesterday. They're doing their thing. I always hold my breath when they come on. Is their thing like our thing? But you know,
can I ask a really wonky and potentially stupid question?
That's what I do for a living.
When do they measure the CPI through the whole month, or is it a point in time? And here's why. Oil started July at 65 or 66 bucks. It ended July at 80. It rose pretty much the entire month of July. Do they measure the CPI at a specific date?
No, not.
Or do they average the whole month?
No, and that's a good question because the data.
It's not a stupid question.
It's not a stupid question at all because, well, first of all, I've been trying to figure out how the government does data for 23 years. I'm not sure I've been that successful, but think about it. They do the employment report in that week containing a certain date. I think it's the 12th, okay? The CPI is over a period of time. However, there are things like they get direct pricing data from certain retailers. They take the oil price from different places. And that's the way you should think about it. And I just want to make one point, which is never in the history of my time here at CNBC, has the importance of what Brian reports on the energy business been more important to what I'm reporting on the macro side.
Well,
so Brian, if you could just please tell me what the heck's going to happen with oil prices and whether or not we're going to stay down here in the 80s or go to 100, I could do my job a little bit better, but I feel like you're failing me.
I used to be a commodities trader, and I highlight used to be because it's a hard job. And I was curious.
I can't do my job anymore.
If they measured oil prices in the CPI on July 2nd, the results are going to be very different than if they were.
I believe they take an average over them.
I will tell you this because I used to live there.
And by the way, it's consumer prices, so we're talking about mostly gasoline and other fuels.
People care about that, right? But I will say this right now, and the one thing I am confident of is that J.D. Vance commented on Ukraine. There's a story in the FT today. Black Sea, Ukraine and Russia and the Black Sea are just as important, or maybe more important right now for oil markets than Hormuz, because Ukraine and Russia, it's not getting attention.
You have a couple hours left, Brian. Can you tell me how much is important that we're down below 300 million barrels on the SPR?
I think we have Amos Hochstein on yesterday or tomorrow, and he will know more about this than I would, but I will say that under 300 million barrels in the SPR. Remember, the SPR is a number of different salt caves, not one facility. And these are literally caves they pump oil.
Out if it
it's
goes
unclear.
Down.
They've never been this low because they've never been this low since we filled them. So there is a school of thought, but again, it's untested, how well we can pull oil out of these caves under a certain amount, because they just don't know if the physical cave will be stable. No one knows because it's never happened. So we don't know.
See how I turned the tables, turned into the interview of Brian instead of him interviewing me? I like that.
Like the McLaughlin group, my second reference to that show.
I gotta go.
All right, Steve, we'll see you in a bit.
All right, coming up, the AI spending boom. Will there be a pot of gold at the end of the AI rainbow? We're going to talk more about that with tech investor Mitchell Green, and check out shares of Mediterranean fast casual chain Kava. They're up sharply after stronger than expected quarterly results. That stock up 11% right now. And the CEO, Brett Schulman, will join us in a few minutes. We'll break down the results. Maybe, Steve, we'll talk a little bit about that consumer. Can we measure CPI on Yidos? And yes, it's Yido. All right, this morning we're going to break down the massive AI spending spree and whether these record tech investments will actually deliver a return on equity. It's a $1 trillion question. Joining us now to answer it, Mitchell Green, founding partner of Lead Edge Capital, and a man I just learned is originally from Michigan. So I automatically like you more. Mitchell, welcome.
Thanks so much for having me.
I mean, that is the question. Listen, yesterday you had Sundar Pichai of Google saying 1 billion Gemini users. Now, I don't know if that's Google, Gmail, Gemini's embedded in that. How many are paying? Maybe we don't know, maybe we do. At $20 a month per retail user, can Google, these other companies, OpenAI, make up the trillions in spending? It's a small question to start the interview.
You figure that question out. Like they're going to need the Bank of Jensen to, help do it.
Well, they got it.
They got
part of it 2 days ago.
And they're going to, I think, need a lot more of it over time too. The amount of spending. The answer is AI is going to change the world. It is going to revolutionize things. It will probably be bigger than the internet. But are we like in a bubble right now? Absolutely.
Okay, define bubble then. What does that mean? Because bubble means different things to different people.
Yeah, it will be a bubble and it will probably pop. Will we probably overbuild at some point for the near term? Like, probably. Will people get overexcited about things? You hear big companies right now talk about, like, are they seeing near-term ROI? Right now, there's obviously one killer use case for AI, coding. Okay. Will there probably be others? Yes. Had we sat here in 99 and 2000?
So,
yeah.
I was in this studio in 1999. I think I was the first person to ever broadcast from here, at least one of them. And I have a picture, maybe I'll tweet it out, of me standing in front of that wall right there. And there's all these companies that no longer exist. They were $250 and 1/8. That's when we use fractions. Per share. But those were garbage companies that had no revenue, and analysts were creating fake metrics like revenue per eyeball. That was actually a metric that they used. Is it different this time, Mitchell, that these companies, most of the ones we talk about, these are real companies with real revenues? They're not socks.net.
Didn't say earnings, but yes.
The fair point.
I think
most don't have earnings. They're losing billions.
But what's interesting is if we've been on the show, we would have debated whether e-toys or, e-bags or pets.com were going to, put out a business.
Or Commerce One, Ariba, ICGI, CMGI, keep
all
going.
guys. What's interesting is a lot of the incumbents did great. Most of the new guys busted. A few of them became gigantic. But I think the interesting thing is, had we sat there, we never would have talked about, like, social media. Like, we wouldn't even have talked about it. Like, and it was a $5 trillion market today. So I think you're going to see giant businesses come out over the next 5 to 20 years leveraging AI that we're not even talking about right now. And the coding is just the first category. And I am sure people will overspend, just like they did in the telecom bubble. And but what's a little scary this time is the amount of leverage being put on this system, and like the amount of implicit leverage. Like if a company, it says in 2030 they're going to do X in revenue, and they're going to like borrow debt, but they're going to like you have an IOU with NVIDIA that's going to pay Oracle and all this circular stuff. That's what worries us a bit, and to try to figure it all out is insanely complex.
Of course, and the payback assumptions are basically the whole equation. And look, you have SpaceX saying we have a 1 year or less than 1 year payback on the AI compute that we built.
Yeah.
Capitalism's not supposed to work that way, okay? So every single company piling on more capacity, and if nothing else, it's making tech so much more asset intensive.
Correct.
And capital intensive.
It's the opposite of like what all the like hyperscalers
and
work.
What are the implications of that, either for valuation or winners and losers?
Valuations don't matter, I guess.
Yeah.
Well, how much of that comes down to token economics, though? Because that's another part of the debate that's really shifted over the last few months, and this idea that, multinational companies are being a little bit more discretionary about token costs. They expect them to accelerate in the second half of the year, but they're monitoring it. They're finding ways to kind of pare back how much their companies are potentially spending on AI. How does that ripple through?
No, it was all about token maximizing, obviously, everybody encouraging everybody. But you can use, and it's why you're going to start to see a lot more about these open source models. There's companies like Fireworks.ai and Base 10 that have just like exploded in popularity, which help big companies like Cursor or companies like Uber, any companies that have tons of data, Spotify, Airbnb, that have huge amounts of data, run inference, and they can run inference at like 1/10 the cost of these big models, which is incredible. And then you wonder, like, okay, well,
what does that kill the big model?
It doesn't kill the big models, but it definitely could lead to pricing pressure. And like we think over time, token prices are going to come down over time, fall dramatically. But
will they become commoditized?
That's the million-dollar question that nobody knows. We tend to think they probably will, but like who the heck knows? But the real question is this: you know, the frontier models continue to get better and better and better and better. For most use cases at my firm, you know, we've got a bunch of like type A personalities of people that work here, and we all need Fable and Opus. Actually, you probably don't. Right. You can probably, you know, scan your emails with Sonnet. And so this, I think what's going to get to a point, I don't know if we're there yet, but you're going to get to a point where a bunch of these models, at least for current use cases where we haven't like come up with the next social media quote use case, you don't need, like, the model that was out a year ago is good enough. And in which case, the open source models aren't that far behind. Mm-hmm. Now, I think what will happen is running these massive parameter open source models can be very complicated for most companies, for a lot of companies, small and large. And so I think there's going to be companies like Base 10 and Fireworks and others that are already exploiting that will continue to grow a lot, and there'll be new ones created. And you see companies like OpenRouter that is rumored to be being acquired because companies are trying to figure out how to like, what's the best model to answer the best creation. We are like in the very early innings of all this stuff.
What do you think that all means then for the potential for Anthropic and OpenAI to go public? Because we assume they're unprofitable. We speak like they're unprofitable. We don't know what their numbers are.
We've never seen we've never seen. I can see what's rumored in the press. We're not investors in either of them. Shame on us. I guess we should have been because we could have invested years ago. But I'm as excited about you guys to see those companies file S1s and to actually see where they put stuff in gross margins and where they don't. There's millions of different ways to classify things. Look, these things, you see how much money these companies are spending on CapEx. They need to be public companies. What they don't have, and we think Google is probably one of the best positioning companies in the planet in the AI race because they have a cash machine, and they also probably have the best training data in the world with Gmail, YouTube, search data, all these things.
Investment grade rating too, raise capital.
What else?
It does help, right?
Yeah, it's
leverage their balance sheet, and that was the idea behind the 6 banks or financial firms. Mitchell Green, really appreciate you coming on. Lead Edge Capital, former champion ski racer.
I was a big ski racer.
Type A personalities. Here we go.
Appreciate it,
Mitchell. Thank you.
Thank you.
Coming up, Cava CEO Brett Shulman on the restaurant chain's latest results, food safety, and much more. That is next. Squawk Box returns in just a moment.
Time now for today's Aflac trivia question. Which company was the first to put a prize inside a cereal box? The answer when Squawk Box returns. Now the answer to today's Aflac trivia question. Which company was the first to put a prize inside a cereal box? The answer? Kellogg's in 1909.
Kava shares jumping after reporting better than expected second quarter earnings, including traffic growth of 5.3%. Joining us now, Brett Shulman. He's Kava CEO. It's good to see you, Brett.
Yeah, thanks for having me.
Coming in. So obviously, pretty good comps, traffic. Talk about the way the quarter unfolded. Obviously, it featured the Cyclospora news and maybe customer reaction to that.
Yeah, so we had a really strong quarter. I want to give a shout out to our 15,000 strong team members who deliver heart, health, and humanity every day. It's just a reflection of the great work they're doing. As we exited the second quarter, while we weren't connected or our ingredients weren't sourced from any of the impacted areas of the food safety outbreaks, we did see broader consumer concerns around leafy green consumption, fresh produce consumption that did impact our near-term sales trends, but we've since seen those trends begin to rebound.
There was some, I guess, commentary. You beat in the quarter relative to the latest estimates, but maintain guidance.
Yeah.
So what are you seeing or projecting that has people saying maybe it's a little conservative?
Well, just given the broader uncertainty around the food safety outbreaks, combined with the fluid macroeconomic and geopolitical situation, as well as potential persistent inflationary pressures on the consumer, we felt it was prudent to maintain our current guidance.
So you're not a lettuce, I can't believe I'm going to say these words, lettuce-heavy restaurant.
Well, that's the beautiful thing about
so you're not. I don't think of like shaved lettuce when I think about Kava. So in fact, I went there Monday. I didn't know you were on, obviously. Whatever. I just went there for lunch. It was delicious. My shirt loved it too, by the way. Is there a way in which maybe you're helped by that? Because I don't think of you guys necessarily as like a shaved lettuce type restaurant.
Well, we are definitely produce forward, so there's definitely some concerns around that. I think, but the beauty about our Mediterranean cuisine and our menu is 17.4 billion combinations, a broad variety of ingredients that you can opt into, shift into green bowls and pitas, so you can have a meal that you feel really comfortable in no matter what the situation is.
How do you think about supply chain safety? I was reading about how lettuce is one of the most difficult and least regulated types of produce that comes across the border, and it's difficult to patrol for safety. But as a business owner, how do you assess your supply chain and make sure that it is operating with the highest standards, and so you won't be embroiled in all this?
Yeah. Food safety is foundational to the relationship with our guests, and frankly for any restaurant and their guests, which is why we've been proactive and taken measures over the years to invest ahead of our growth in food safety, doing things like standing up an external food safety council of industry-leading experts like Dr. James Marsden, Dr. David Atchison, or investing in food traceability software so that if there were an issue to arise, that we could identify it and address it very quickly.
You mentioned, at least in the air, the consumers maybe being a little bit hesitant at certain, income tiers and things like that, not necessarily eager to spend more. You're kind of absorbing most of the inflation. What are you doing in terms of list price?
Yeah, it's been a very intentional strategy for us for a number of years now. We've talked in the past, we've underpriced CPI by over 10% in recent years, taken less than half the price increases of the average restaurant company. Even when you look at 2026, we took about 1.5% menu price adjustment at the beginning of the year with no current plans to take additional price when CPI is running about 3.1%, so less than half, really trying to work on behalf of our guests, invest in our guests, invest in our teams, which is driving that sustainable traffic growth.
People grouse about price, but I don't know if they actually do anything about it. I mean, the lines at your places are they're I don't say long, but they're good. I mean, there's customers that are in there. Who are you taking market share from? It's not going to be a net add, right? There's only 7 days in the week. Who then are you taking the customer from?
I think we're seeing people trade into Kava from all different places, whether that's limited service, full service, grocery. I think our food is difficult to recreate at home. It's very unique. And I think what's really encouraging is that we see across all income strata, we see strength in our markets, and we see strength even in our lower median household incomes, where we're seeing those guests actually opt into higher premium attachments, so they feel like they can trade up into our new pomegranate glazed salmon or our harissa honey chicken and still feel like they're getting a great value and it fits within their budget.
Yeah, that was surprising to me. I saw that in your report, that it was the lower income consumers that were actually doing more of the adding on. Is that unique to this environment, or is that something that you've seen historically as well? I ask because there's all this debate over the K-shaped economy and what consumers are doing.
We've seen that grow over the years, as I talked about how we've tried to improve our relative value proposition each and every year, underpricing inflation, making our food more accessible to communities across the country, and welcoming more people to the Cava table.
Cava was sort of, instrumental in getting out in front of the Mediterranean cuisine trend, making it more accessible. Are you looking over your shoulder for the next thing? Or in terms of like whether there's a certain fashion element and customers like to try new things, is there anything you're looking to incorporate or that you see as on the come?
We're always trying to evolve our menu within our Mediterranean lens, within our identity. So a lot of times I think restaurants can start to evolve outside their identity. We want to evolve within our identity and stay true to our Mediterranean essence.
Is there an international opportunity for you guys?
I think down the road, we're focused on domestic growth. We think we have significant white space opportunity across the country. We announced
what is white space opportunity, right? I'm not my lingo. You're a former banker, FBR, right? Friedman, Billings, and Ramsey.
Yeah, and Alex Brown back in the day.
And back in the day, so you're a DC guy, is my guess.
Yeah.
I think you're a Terp. You're a
Terp.
Terp. You're a Terp. Talk about that. But is there, one day we go to London and we're going to see a Cava.
Yeah, maybe one day in the future. We're focused on domestic growth. We announced on our call we're going to expand to Las Vegas later this year, and then next year we're finally going to make it to Northern California in the Bay Area. So there's a lot of the country that we do not have a Cava in, whether it's growth in existing markets or growth in markets we don't currently operate in today.
Yeah, not so much density of white space, as you might say on the map. Brett, thank you. Good to talk to you.
Thank you so much. Coming up, we are counting down to the release of the July Consumer Price Index at 8:30 a.m. Eastern Time. Wall Street expects a 3.4% year-over-year increase, while core CPI expected to decline 2.5%. On prediction market Kalshi, only 25% think the year-over-year number will be above 3.4%. Squawk Box returns in just a moment.
right, good morning, everybody, and welcome back to Squawk Box here. It looks like this market that just wants to go up, grind higher, Mike Santoli, every day. We're looking like that again. Futures, they are higher across the board. In fact, NASDAQ futures implied open up 180. I think that would, Mike, put us
About
at
0.6 of 1%.
Yeah, I mean, would that put us at a record high or right there? I mean, sniffing distance?
Keep in mind, the NASDAQ futures are the NASDAQ 100. And so you might be a couple percent below.
But we're so
close.
This is a market.
S&P had a little bit of a very modest 2-day pullback of like 0.5%.
And
what about where we were a week ago?
Yeah, but this is a market that with the NASDAQ 100 is up, what, 18, 14, whatever percent this year. Small caps up 22% this year.
Yes.
So despite all the Sturm and Drang, all the headlines around Iran, all the fears, 4.7, 4.6% 10-year yield, $83 oil, it is a market that seems to want to grind higher.
That's the default mode of the market, is to find a way higher unless something really interrupts the process.
And people are asking a lot, why? Well, what is it? That there's 3,800 tradable stocks or something in America? There was 8,000 30 years ago. There's more money chasing
the earnings power of the companies that dominate the S&P 500 is just pretty stupendous right now.
Riddle me this then, Santoli. Are we not, the earnings are, we always say earnings are good. The numbers I'm seeing suggest they're not good. They're record breaking. They're great. In some cases, all-time record high year-over-year earnings growth, which puts the multiple of this market back to a 19.5 if you look at forward multiples, which is bottom end of the range, and you can make the case, and many on Wall Street are raising their estimates, that maybe this is a market that is undervalued.
Let me wrap the cloud around the silver lining, as I like to do, which is to say...
That's what I call you, silver lining Santoli.
It's possible that companies can over-earn and growth can be too good. Not coming out of a recession where you're already in an expansion, and it probably means there's been pull forward of demand and things.
Does that mean over-earn?
It means
Sorry, Mom, my grades are too good.
The 18% of the S&P 500 that are represented by semiconductors have massive pricing power and expanded gross margins because of scarcity that they're exploiting, and you have a lot of this capacity addition and all the revenue coming in from data centers and all the rest, where the costs are not being applied against it yet.
We've heard
so you get revenue first and not the costs against it, which happens over time.
And we've heard that from bank executives as well, this idea of over-earning in the current environment, the pull-forward effect, the idea that things are kind of as good as it's going to get, so don't expect this to continue forever. We don't know how long it's going to continue. But
look, the other piece of it is, in terms of the valuation, we're down from like 23 times earnings to 20-ish, or even below
19.5 in some measures,
from last fall. But do we have a different type of index now? Because one of the reasons we're at 23, it's like, it's all free cash flow. The best companies in the world are asset light, and it's not like they have risk of that much capital at hazard. So I do think there's an argument to be made that valuations might be capped a little bit lower than they were before.
So Goldman Sachs, I think you know them, 44% stock gain year over year. Donald Trump coming, he's the president. You might have heard about him. He came out and said that Exxon and Chevron earned too much money. Basically name check them, whatever you want to call it, that oil companies were making too much money. So there is that fear, I think, of the over-earning. And let's not forget, with the market that discounts the future, now you're going to have to lap these earnings
100%.
Next year.
You're decelerating no matter what.
What is it Janet Jackson saying? What have you done for me lately?
That's right, she did. It might have been a saying before that, but yeah.
It's nasty.
Yeah, but to your point, it affects the comps. Next year, we'll have harder comps, because earnings were so good this year.
And when does the market start to look at that and go, well, we can't get 30% earnings growth again because those comps are coming back around? If we look out 9 months, that's not too far off, Mike.
No, we're already pricing off of 2027 right now.
Another company benefiting from the AI build-out is Supermicro. Shares of the server company popping, following better than expected results there as well, up more than 8%. Supermicro issuing upbeat earnings and revenue guidance for a current quarter, and a better than expected full year sales outlook as well. Gross margins coming in at 17.5%, above a preliminary estimate, and more than double an initial forecast of about 8%. So there you go. Coming up, the parent company of the Call Her Daddy podcast getting its first outside investor. We'll hear from Unwell's co-founder and co-CEO Alex Cooper about the new investment and more next. And as we head to break, check out the early down movers. Squawk Box returns in just a moment. This morning, Alex Cooper's Unwell announcing it's taking its first outside investor from the firm of Hollywood super agent Patrick Whitesell. The investment values the parent company of the Call Her Daddy podcast at $500 million. Andrew Ross Sorkin sat down with Cooper and Whitesell.
You've been in the media space for a very, very long time, and you've sort of seen this sort of massive transition to the creator space. What does that mean? I mean, she's also getting increasingly involved in the production studio side of the older world, but I'm also curious how you think that relates to sort of the newer world.
The one thing that has not changed since I've done this is you got to find the most talented people. And backing this, and the reason why Unwell is going to become a household brand is because of Alex and Matt and their ability to kind of build it. And that is always, and still will always be, the hardest thing to find. So you're seeing a lot of money coming into this, creator economy. People are raising funds to do it. And the good news is there's less barriers of entry. Anybody can jump in. The hardest thing, though, is for someone to kind of scale it the way Alex has. And I think that's what's so unique about this opportunity and very, very hard to find. I think the best analogy is to think of it more like the music business. So Dr. Dre becomes a big producer, record label. He then finds Eminem, brings him in, creates that infrastructure. That creates a label. Eminem finds 50 Cent, then there's a sub-label. So I think if you think about it more in those terms, where underneath the Unwell umbrella, there can be these sub-brands and labels, if you will, but you benefit the way Eminem benefited from Dr. Dre on how to make a great record, how to become a big star, etc.
I also think our relationships, right? We've built such incredible relationships with Google and other huge household brand names that we are able to completely look at our slate and say, do you want in on this deal? Do you want in on this deal? And so instead of a one-off deal that a lot of creators are only privy to because they're just one individual, because we have this network effect, you're gonna get long-term 3-4 year deals with brands that they would never cut that check for you as just a singular creator because you can't scale it by yourself.
You've partnered with lots of different companies, Sirius being one of them, obviously the different production or different streamers and others. Long-term, do you think, for example, that your podcast lives on a big platform like a Sirius, or do you think you just do it independently?
I think there will always be conversations about where should shows live, but if I've learned anything, it is you want to be everywhere. I think that a lot of creators are making the mistake of going to one singular location. You're cannibalizing your business. Every single audience that I have is a bit different, right? If you listen to me on Apple versus if you watch me on YouTube versus if you consume me on Spotify, it's a very different audience, a very different demographic. You'll even see it with guests sometimes. The demographic on Spotify is very different than YouTube. And so I think it's a matter of staying wide instead of focusing on one.
So what do you think? There's a whole bunch of people who've gone to Netflix, for example, in the podcast space. You're making a face. Is that going to work?
I think, again, it's case dependent.
I think she's got optionality. She can do all of it. She can do it herself. She can go to where I think it's going to be a very interesting time.
But increasingly, don't you think the platforms are going to want exclusivity? Or do you think that's not going to be? I mean, you've lived in this space on that front.
I mean, I think that's harder in the podcast space, right? I mean, obviously you get it with premium television content or film content, but I think what Alex is describing is fundamentally different. But I think, listen, she's going to have, I mean, if you look at her audience and how big she is in that space, any number of people are going to want to be in business with Alex long term.
And we'll have more of Andrew's conversation with Alex Cooper in the next hour.
All right, coming up.
Alice Cooper or Alex Cooper?
Alex.
Because if it was Alice Cooper,
then just take the whole hour.
Let's just take the whole hour.
Who's out for summer? All right.
Good pull, Mike Santoli. You just went up.
We were all kids at the same time, Brian.
No more a nice guy here.
What President Trump's executive order could mean for the vaccination schedule for children in the U.S. We'll get into that topic and more with former FDA Commissioner Dr. Scott Gottlieb at 8:10 a.m. Eastern Time. Squawk Box returns in a moment. Norway's $2.3 trillion sovereign wealth fund reporting a record half-year profit of close to $185 billion. The fund returned 9.4% for the first 6 months of the year. It was helped by a newly disclosed stake in SpaceX, valued at about $1.2 billion. The CEO of the fund's manager credited returns from Asian tech stocks for the first half performance. About 40% of the fund's portfolio is made up of U.S. equities, including valuable holdings in NVIDIA, Apple, and Microsoft.
Yeah, and you get 13Fs Friday is the deadline. So you'll start to see
Have some
more
updated numbers, yeah.
more updated numbers, more updated exposures for some of the big funds.
Do you know
Maybe
anybody
SpaceX
who
shows
will
up
be
in
digging?
more, actually.
Do you know anybody who might be digging through said filings?
You know, I do know people who were doing that job this quarter. Yes, indeed.
As we would call it, what do we call it?
Whale watching.
Do we still call it that, or is that what we? Because the whales, the big hedge funds.
Yeah. Although it seems applicable to Norway as well. He's wearing a whale tie.
My tie is covered in whales.
So you're just ahead of the curve.
Not actual whales.
You're just so excited for Friday's 13F filings that you wanted to wear the tie.
I wanted to
today.
get ahead of it. That's right.
Yeah. All right. Coming up, NVIDIA teaming up with several Wall Street heavyweights on a $500 billion AI financing deal. We'll speak to a critic of the AI spending boom and hear why he's concerned about the eye-popping numbers and whether there is enough demand to go around. Squawk Box returns in just a moment. Welcome back. Following NVIDIA's latest AI financing initiative with Wall Street heavyweights and Jensen Huang's subsequent attempts to alleviate concerns over circular financing, our next guest says the new initiative is vendor financing by proxy. Ed Zitron is the CEO of Easy Primary Research and host of the Better Offline podcast. Ed, good to see you.
Good to be here.
So you don't think this alleviates the concerns about circular financing?
No, this fund, which is, by the way, still a memorandum of understanding, we do not actually have contracts, it's just vendor financing. NVIDIA is raising the funding, they're finding the customers, They're the vendor, they're the customer in some cases. With CoreWeave, they're a large customer with Lambda. They basically pay people to rent back the GPUs that they sell them. They help raise the debt, they fund the sites. It's vendor financing, but they've been smarter than the Ciscos and the Lucents in the past by not actually becoming a bank.
Well, and I think that's an important part, in that the financiers that they're working with are the ones who are going to determine what the interest rate is that they lend on, as opposed to NVIDIA removing itself from that process, which creates more of a, traditional kind of lender-borrower dynamic, in such that, we will lend to you, but here's the price by which it will cost for you to actually borrow this money.
But the trick that NVIDIA does is they lend their credit to companies by not actually lending their credit. With Lambda and CoreWeave, I think they pay them $1.3 billion or more in these 4-year-long contracts. These contracts are then taken to financiers and they say, hey, look, we have a customer. Even though that customer is also the vendor, NVIDIA also propped up CoreWeave's IPO. They invested over $2 billion in them, and I think in Iron as well, post-IPO. They are propping up these companies, they are helping them get funding, and they're backstopping deals as a means of, funneling money to themselves. And they found a way around actually doing the financing themselves while basically getting all the benefits.
Whatever the machinations of how they're getting the capital, lending it, deploying it, what you hear is, from somebody in CoreWeave's position, from any of the hyperscalers, from anybody along the food chain, is we are responding to demand signals that cannot be denied. There is more demand than supply. There is a scarcity trade. We need to build in order to find out, where the clearing level is for supply and demand. So I guess NVIDIA's point is you just have to get it out there, and the demand will take care of those issues.
But the thing is, the demand is mostly OpenAI and Anthropic. So Bloomberg actually reported a few days ago that 70% of Microsoft's AI revenue in fiscal year 26 was OpenAI, which also suggests that Microsoft 365 Copilot and Compute is a single-digit billion business. All of the demand from CoreWeave is OpenAI, Anthropic, Microsoft for OpenAI, and of course Google for OpenAI, and then OpenAI for itself. These companies are basically just compute fronts for two unsustainable, unprofitable AI labs that are basically the only growth engine for hyperscalers at this point. Everybody's propping up what is really the end of the era of hypergrowth.
And how can you say they're unsustainable?
Well, I mean, they burn tens of billions of dollars a year and have no proof that they will ever find profitability. There is this mythology that inference is profitable. There is no actual proof of this. This is something Dario Amodei said once as a stylized fact in an interview with Dwarkesh Patel. Nobody has actually proven this.
Google Gemini, so Sundar Pichai of Google, Alphabet yesterday said 1 billion users. I don't know how many of those are layered on top of Gmail. Gmail automatically sort of integrates Gemini. It'll summarize your emails. Copilot, it's sort of automatically, unless you opt out, integrated into Outlook. Do we have any idea, Ed, how much organic use there is of AI, meaning people who just choose to use AI and pay for it independent of other products like an Outlook, Gmail, etc.? Do we have any idea what that demand case is?
Well, yes, we do. So the thing I mentioned with Bloomberg, 70% of Microsoft's fiscal year 2026 revenue for AI was from OpenAI.
Yes.
So about $34 billion total. About
That's Copilot, Outlook.
So just to be clear though, $10.3 billion of that was everything that wasn't OpenAI, which means that Microsoft 365 Copilot is making single-digit billions of dollars of revenue. That's pathetic. $261 billion of CapEx Microsoft has spent since the beginning of 2022 for a teeny tiny business. And I know billions sound like a lot of money, but not when you're building data
It doesn't in this
centers.
case, you're right.
Yeah.
Because and by the way, when we talk about energy demand, I'm actually starting to see the word quadrillion. I'm not joking. Thrown around, quintillion, quadrillion, over trillion. So I would imagine you got two options: grow the user base massively, or raise prices massively, or some combination of the two to make back up that money. What's the answer?
So the problem is Sam Altman himself said when they moved all of their enterprise customers in OpenAI and Anthropic over to per million token basis, paying for the actual cost of AI. And within 1 month or two, I think Uber blew through their entire annual token budget in a single quarter. You had everybody screaming like they were being pecked to death by birds about it. And Sam Altman said, yeah, this is a huge problem. This is the man who's meant to be the head of the biggest startup of all time. And his answer was, yeah, people don't like that. And the thing is, people really don't. And we have this misalignment with the price of AI, the cost of running AI, and, well, actual consumer demand. And the problem is that large language models are not consistent products. They don't have consistent return on investment, and they don't have consistent costs, which makes them a nightmare to scale for businesses. And so there's really no opportunity to raise prices at this point because we've already seen what happens. Customers protest.
How does the debate over open source versus closed factor into that business model, and especially the moats that seem to be a little bit dubious at this point?
Well, here's the funny thing. Dario Amodei position of Anthropic, he positions open source as anti-American, that if we let the Chinese models take over, well, that's anti-American. I can think of nothing more American than having competition in the large language model arena. They're terrified because people have found a cheaper, but not confirmed as profitable, way of doing much the same thing, of beating them on benchmarks or matching them on benchmarks. So they're scared of China because they know that China is operating with less GPUs, though they do have access to Blackwell, and operating with less money, and yet doing about the same thing. And they'll say it's distillation, they'll say all of these things, but what they're actually afraid of isn't China, it's competition.
If the IPOs of OpenAI and Anthropic get done as expected, let's say whether it's the next year or so, that would seem to capitalize them to a point where they can run this experiment for quite a long time. So what are the, I don't know, I guess investment implications of all this?
So, UBS, analysts at UBS found about a month ago that they estimate that 48% of Google Cloud's entire revenue next year will come from Anthropic and OpenAI. That is over $124 billion, and that's on top of tens of billions of dollars with CoreWeave, Iron, Microsoft, and all sorts of others. Point I'm making is, if they go public, and it isn't if at this point, especially for OpenAI, they will have to raise $100 billion, $200 billion each every year in perpetuity. The Wall Street Journal's Anissa Gardezi reported the other day that OpenAI plans to spend $750 billion on compute by the end of 2030. That's less than 3.5 years away. I just don't see how it's possible. That's more than the hyperscalers are raising to build the data centers.
Yeah, the numbers are so eye-popping. Ed, thank you.
Thank you.
Appreciate your time this morning.
All right, everybody, it is 8:02, almost 8:03 a.m. here on the East Coast. You're watching Squawk Box right here on CNBC. I am Brian Sullivan, alongside Leslie Picker and Michael Santoli. Thanks for being with us. Among today's top stories, key inflation data. It is out in less than 30 minutes. It is the CPI, certainly could move markets. It's expected to tick higher by 0.1%. This after dropping by 0.4% last month. Economists expecting a 3.4% year-over-year increase. Those are the numbers. It's out in 26.5 minutes. It could move markets. Meantime, politically, wow. The AP calling Wisconsin's race for governor early this morning. And guess what? David Crowley beat out progressive Democratic Socialist candidate Francesca Hong. She was a 96% chance victor on prediction markets, and she lost. Meantime, energy traders on alert. Iran-backed Houthi rebels killing 6 people in an attack on a cargo ship in the Red Sea. Tehran says the Strait of Hormuz will remain closed. What's next? What's new? Until Washington accepts its conditions. By the way, Secretary of Energy Chris Wright late last night posting on Twitter, X, the Energy Department has the best available data on oil shipments leaving the Arabian Gulf, and he notes that some private company data may be underestimating the number of ships actually getting through the Strait of Hormuz because they are moving covertly. They're turning off basically their transponder. That is Secretary Wright last night. Mike?
All right, the equity futures indicated higher, especially led by the NASDAQ, now up close to 0.75% there on the NASDAQ futures, up 200 points. S&P 500 down 2 days in a row, modestly, about 0.5% or so in total, up 13 points. Treasuries ahead of that CPI number. You see the 10-year yield, 4.66%, so below that 4.7 number that it's kind of tickled a couple of times there. 30s at 521, excuse me. Let's get to Contessa Brewer with a look at this morning's pre-market movers. Morning, Contessa.
Hi there, Mike. Starting off with a look at chip stocks this morning, names like Advanced Micro, Intel, NVIDIA, and you can see they're all in the green this morning. Micron up 3% as AI chip makers are raising money to support demand for AI computing power and the AI infrastructure build out, with NVIDIA partnering with 6 large asset managers for that $500 billion in financing that we've been reporting about. And of course, Intel upsizing its common stock offering to $20 billion. We'll keep our eye on these names today. Shares of on holdings up just under 1% After yesterday's 20% drop and worst day on record, it followed mixed second quarter results and weak guidance. The running shoemaker deliberately held back wholesale growth. The CFO said, look, leftover inventory in the stores would just put that full price integrity at risk. They don't want to do that. Shares of On Holdings recovering slightly this morning, up 1.1%. Finally, you've got shares of CoreWeave surging this morning, almost 19% higher after posting second quarter results that beat Wall Street estimates. Revenue more than doubling from a year ago. It also raised its expected ranges for full year revenue, adjusted operating income, and capital spending. CoreWeave has been racing cloud market leaders like Amazon and Google and Microsoft to open AI data centers. And look at that year to date, up almost 50%. Don't miss the CEO of CoreWeave in an interview on Squawk on the Street. That's at 9 a.m. Eastern, where we'll hear a lot more. All right, Mike, back to you.
All right, Contessa, thank you.
Sure.
Coming up, President Trump signing an executive order earlier this week related to childhood vaccines. Former FDA Commissioner Dr. Scott Gottlieb will join us to talk about what's changed in the nation's vaccine policy. And we're counting down to July inflation data, the Consumer Price Index, and market reaction at 8:30 a.m. Eastern. Squawk Box will be right back.
President Trump signing an executive order on Monday that could upend the vaccination schedule for children in the U.S. Joining us now, former FDA Commissioner Dr. Scott Gottlieb. He is a Pfizer, Illumina, and United Health Group board member and a CNBC contributor. Dr. Gottlieb, good to see you.
Thanks.
What do you think this means for a nation that has already become more and increasingly skeptical of vaccinations broadly?
Yeah, look, I think the discussion around this is going to feed some of those skepticisms, and so it's going to exacerbate that. I think in terms of just the near-term impact, it's likely to be very limited. I don't think the manufacturers are going to reformulate the vaccines I think that the insurers are going to continue to provide coverage for it. People will start to make the decisions, providers and insurance companies, based on recommendations from groups like the American Pediatric Association. So I don't think there's going to be an immediate impact on availability of the MMR vaccine. I think in the near term, though, if you look at the EO, in my view, the most significant part of this executive order is what it does to try to put pressure on states to do away with school entrance requirements and state-based mandates. And so I think in the intermediate term, you're going to see an effort to go state by state by some of the anti-vaccine groups to put pressure on state legislators to do away with those school entrance requirements. And if you look at the EO, it specifically talks about using the Department of Education and Department of Health and Human Services to try to sanction certain states that don't provide broad exemptions. It also talks about DOJ intervening in litigation, state-based litigation for states that don't broaden their exemptions. So I think we're going to see an increasing divide in this country between, unfortunately, red and blue states, where some of the red states start to weaken those school entrance requirements and those mandates. Blue states maintain them. We've already seen that play out. If you look at the data, vaccination rates have fallen based on political divides. I think that's going to be exacerbated over time.
Is there anything in the scientific data that supports these changes? Has anything changed in the scientific community that would suggest it is beneficial to divide the MMR vaccine or to kind of pare back the number of vaccines that children get?
Yeah, look, I certainly don't think so. The issues around the MMR vaccine and a purported link to autism has been one of the most exhaustively studied questions in scientific history. I mean, this goes back 20, 25 years. I was at FDA in the early 2000s when we launched some very large studies to look specifically at this question. So I think this has been exhaustively studied, and sometimes we have to take no for an answer. In terms of why those vaccines are put into a single shot is because we want to try to reduce the burden on providers and patients. Those vaccines are all live attenuated vaccines, so they're similar in formulation, so they can be co-formulated together. So the goal was to try to reduce the number of shots children get, to reduce the inconvenience to parents and providers, and also make sure children are getting vaccinated. So there was a logic in combining them.
Fair enough. I want to push back a little bit, Doctor, and say this, that there's a lot of lazy reporting out there about these measles outbreaks, where it's like, well, we hear that outbreaks are in Texas and in South Carolina, and it automatically defaults to some political thing.
Yeah, no, I agree with that.
That's lazy reporting. If you look at the data is publicly available.
Well, what I will say to that...
let me finish.
Please.
This is critical. This is not, it may be political, but it's also very religious. A lot of the outbreaks, the majority of the outbreaks in Texas were among basically an Amish community. They're not going to take vaccines no matter what you do. One of the South Carolina outbreaks, almost all of it was centered around a tight-knit, Slavic,
That's where I was going to go.
very
You're right.
religious
Yeah.
community in Spartanburg, South Carolina. These are not people who are anti-vaxxers because of politics. Their religion does not believe it. So what are we willing, and there's a lot of just laziness out there reporting what's like, well, they're Trumpers, so they're anti-vaccine. I'm sure there's some of that. But how much are we willing to tell a religious community that doesn't believe in this and hasn't for 100 years and won't 100 years from now, that they're required to do something that their religion says they should not do? And that's the challenge.
Yeah, look, there are religious exemptions on the books. I think to your point, and that's where I was going to go in responding to your comment, I'm sorry I interrupted, but there are pockets in this country where vaccination rates are extremely low. Oftentimes those are in communities where you have people with a religious belief that, obviates getting vaccinated. And that's what we've seen with some of these outbreaks. If you do look state by state and you were to break this down based on sort of the politics of the state, you do see lower vaccination rates in certain red states, in the South, for example. So we are starting to see a political divide in this. I don't think that should be surprising at all. It's not that severe right now. So if you look at, for example, the data that came out, districts that Trump won, the vaccination rate for MMR is about 90%. Districts that Harris won, it's about 93.5%. So not a huge divide, but a divide.
But are we willing to tell religious communities you have to do this? That's the challenge that we face.
It's not the challenge because most states have religious exemptions.
And they're not going to reverse those.
Well, I think I think the exemptions are going to be widened. This is sort of moving in one direction. So I don't think any state's going to tighten the exemptions. You've seen California, some other states do that over time. When MMR rates went down, you started to see measles outbreaks. I don't think that's going to happen. I think what's going to happen is it's going to move in the other direction.
What is the broader public health implications of this? You mentioned you think insurers are still going to cover the childhood vaccinations. That would imply to me that insurers making this kind of cold calculation of cost-benefit believe that it's better long-term cost-wise and outcomes to actually cover these things.
Yeah, I think they're making a lot of calculations. I think it is a calculation based on the health of the population. I think it's also providers putting pressure on insurers to continue to cover this. They'll continue to cover the existing schedule because that's what the American Pediatric Association is recommending. I think the difficulty is going to be if companies introduce new pediatric vaccines, you're dependent upon the ACIP to recommend that, to move it into the schedule. And so will the American Pediatric Association set up an analogous process to start to recommend new vaccines? And so it's going to put some pressure on the market when it comes to new vaccine development and getting those recommended. Right now, what's going to happen is I think the existing recommendations as they existed prior to a year or two ago are going to get frozen in place, and that's what we'll be following.
I want to ask you about what's going on with our food source and our food supply, because you've got the cyclospora and all of the confirmed cases for that. You've got salmonella. How should we be thinking about just our food consumption habits, as well as just from a broader societal regulatory standpoint, what's going into our food supply chain?
Yeah, look, I don't think we should change our habits. I don't think the food supply is less safe today than it was 2 or 3 years ago. I think FDA's done a good job isolating the source of these outbreaks once they've been identified. I think the slowness was in identifying these clusters of infection, but once we did, FDA came in and isolated the food source very quickly. That owed in part to the fact that there were good intermediaries in the supply chain, like Chipotle, like Taco Bell, like Taylor Farms, that were able to isolate within their own supply chains. I think it does call into question produce coming from Mexico. So there is a lot of these pathogens do seem to be emanating from Mexico this season. Something happened in that growing region in central Mexico where sewage somehow got onto the growing fields, perhaps through irrigation. Some of those fields we can't inspect. We can't send U.S. FDA inspectors into those regions because it's unsafe. Cartels operate in those regions. I don't have any reason to believe that FDA wasn't inspecting the fields that are implicated in these outbreaks, but it does call into question whether or not we should be increasing our oversight on those growing fields.
Are there other places we can source from them that make it easier to inspect?
Not really. I mean, we do source some of this produce from California, some of it also from Arizona, if you're thinking about leafy green vegetables. Avocados come from California as well, but 80% of the supply comes from Mexico. They're cut off right now as well, or were cut off briefly. We're dependent upon Mexico and South America to provide a lot of produce. The harvest shifts around depending on the season, and this is the season when we're harvesting from Mexico. We're not typically harvesting romaine lettuce and other things from California at this point in the year.
Yeah, all right. Very helpful, Dr. Gottlieb. Thank you so much.
Thanks a lot.
All right, still to come. We are waiting on that July CPI data. Just 11 and a half minutes. Santoli can't even contain his excitement. We'll get to that. But up next, Andrew caught up with arguably the most successful women in podcasting. It's Call Her Daddy's Alex Cooper, discussing the future of content creation and how AI is changing the game. Part 3 of that conversation coming up.
Welcome back this morning. Unwell, the parent company of the Call Her Daddy podcast, announced it's taking its first outside investor in a deal that values the Alex Cooper empire at $500 million. Andrew Russ Sorkin sat down with Alex Cooper and her new investor, Hollywood super agent Patrick Whitesell, to discuss the future of content creation in the age of AI.
The threat of AI in regards to overtaking talent, and particularly on-air talent, I think is wildly overstated and fear-based. I'm not worried about that at all, certainly in the next decade of that. Longer term, that's hard to predict out beyond that. Will there be efficiencies around AI, of course, and how you create content and cost savings? I invested in Ben Affleck's AI company that we sold to Netflix. It's a really great solution for filmmakers to make movies more efficiently and have more creative options. So those tools are coming first. But the idea that you're ever going to replace an Alex Cooper with some type of digital,
But could you imagine creating, maybe not an Alex Cooper, but creating a completely different avatar, an AI-generated person? I see them all the time on my feed, and some of them pretty great.
I mean, I don't imagine that right now. I think in a beautiful way, and maybe every creator doesn't feel this way, I have never felt more confident in the brand that I've built going up against AI, because I'm not afraid of it. We're absolutely leaning into the positives of it, helping with back-end capabilities and understanding my audience more, for sure. But unique voices are only going to rise, because I think the emotion that comes with a creator and the heart and the soul of that will never die. So you can't really replicate that.
What do you make of the reaction to AI in Hollywood? Because, Ben got some brushback when that deal happened. Reese Witherspoon talked about, leaning into AI, and there was like this backlash online.
I think just people are misunderstanding when we're talking about AI and how it's coming in as a tool to infiltrate film and television. It's not to replace writers. It's not to replace actors. That's not the intent. And the safeguards are there. I think people get nervous about that, and they feel like, oh, they're coming for my job.
Right.
And I think that's just people are missing. They're not knowledgeable on the subject of actually what is going on at the studios and what they care about. And so, to me, I think a lot of that is like kind of clickbait and just overreacting.
Okay. This is not clickbait, but I want to ask you.
Andrew?
Okay, but I want to ask, Dave Portnoy wrote a memoir, and in his memoir, he said that when you were at Barstool and you were trying to get out of your deal, you know where I'm going with this, he suggested that a threat was made that he was going to be accused of sexual harassment. I don't think you've responded to this yet.
I have not.
And I'm so curious.
I've been pregnant, Andrew. I'm busy building a child.
I'm so curious what you thought of that, whether it's true.
I think whenever I see Dave online, we all enjoy his banter. He's a very entertaining person, and I have a very great and complicated relationship with Dave. He gave me my start in this industry, and I will never not be grateful to him. And I think when I haven't read the book, but I remember seeing, obviously, getting tagged in those things, and that's not how I remember that at all. But I also am like, Dave's got his version, I've got my version, and we're all good.
You want to tell us your version?
No. I am in my mother era. I'm no drama right now, Andrew. We're here to talk business.
Up next, a read on inflation. The July Consumer Price Index will be released. Futures up ahead of the numbers. You have the S&P up about 14 points, NASDAQ ahead by 200. We'll get reaction from our panel and talk about what it could mean for the upcoming Fed meeting in September. We'll be right back. We are just seconds away from July CPI data. Equity futures are inching higher. The S&P was down a couple days in a row, but we're getting some of that back right now. The NASDAQ, led by some of those AI hardware names, is up substantially, more than 0.5%. Treasuries going into that inflation print, relatively subdued, off the highs in yield recently. 10-year under 4.65 right now. The 2-year note yield at 4.18. Rick Santelli is standing by at the CME in Chicago. He's going to have those numbers once they break. And Rick, talk about the stakes and the market setup ahead of them.
Yeah, well, we're around 45% in terms of the CME tool that gives us a notion of the probabilities of a hike in the September meeting. And on the foreign exchange side, the dollar's at a 3.5-year low versus the Chinese yuan. And here we go, 7:30, 8:30 Eastern, July CPI hitting the wires, up 0.1% on the headline month-over-month number, exactly as expected. In the rearview mirror, as of this point, still unrevised, down 0.4%, was a massive drop for June. If we take out food and energy, up 0.2, exactly as expected. And if we take a year-over-year perspective, a headline year-over-year up 3.4, exactly as expected. That follows 3.5. 3.4 would be the lightest since March, when we were at 3.3. And in my opinion, maybe the most important number is the CPI year-over-year core. Expected 2.5, and it arrives at 2.5. That follows 2.6. So we had January, February, June, July, all at 2.5. We haven't been below 2.5 since March of 21, when we were at 1.6. Now, I always like to take a very close look at what's going on in the actual indices. On the CPI main index created in 1913, it comes in at 333.91, which is actually not a new all-time high, which is a good thing. In the rearview mirror, the May read was 335. That's the all-time high. So we're actually moving down a bit on the index. That's good news. Now, if we look at the index on a core basis, comes in at 336.78, and that is a new all-time high on that index. We see that interest rates have moved up just a little bit. We're now at 466.5, so we're up about 1.5 basis points, which makes us down a couple on the session. And 2 years at 420, also up a couple basis points. They went from down 4 to down 2 basis points. Even though the market was expecting these numbers, in my opinion, we could still make the claim that we're not quite at the 2% level, Fed's objective, and of course the AI and related issues, especially on issuance, really questioning the cost and the inflation implications of what the AI build-out may have in store for us in the future. Mike, back to you.
Absolutely, a massive swing factor there in the whole outlook. Rick, stick with us. Steve Leisman joins us now with more. Steve, so relatively muted market reaction, but yields back up slightly.
Yeah, I'm interested in that, but just give me some of the details here. First of all, the big story is energy, right? Energy down 1.5%. Answering a question Brian asked earlier, 2.9% month-on-month decline in gasoline. We'll see if that lasts. I don't think it will. I think it's got to come back in the month of August when we get that data in September. Food at home, that was down. It was up just 0.1%, actually better than the last month. And food away from home up 0.3. That's a little worse. Not sure why the burger and the beer at the restaurant is going to cost you a little more, but it is. We were watching, always watching shelter. That has been a big help when I look at overall shelter up just 0.1%. Although, hang on, I'm just looking at this owner's equivalent rent up 0.3, so ticking up a little bit more pressure on the rental side. And then there was this issue of services in general. Motor vehicle insurance fell 2% in the prior month. Not sure why, but it was down again 0.3%. And then Andrew and Joe are not here, but there's a perennially long-running argument, maybe runs about 3 or 4 years now, but airline fares, they were up 2.2%. That's a way that energy bleeds into other issues out there. But overall, the issue, let me just look at this number here. There's a category called services less energy. That was up 0.2%. Reasonably contained. If we continue on this path, we can get down to the Fed's target. It's just going to take some time.
Yeah, and as we mentioned earlier, I mean, the Fed's target, of course, based on PCE, different calculations. Shelter has less of an impact.
We'll watch the PPI tomorrow. They put together the CPI, they throw out some stuff, they put in the PPI, they put them together, they come up with the PCE, that's the one the Fed's decided. And then we can have this discussion another time about the extent to which Warsh is or is not going to follow that number or come up with something different.
Speaking to your point about food, what caught my attention in the release, the index for fruits and vegetables decreased 0.1% in July as the index for lettuce fell 16.4%. Is that the parasite effect?
Yeah, for sure. Demand goes away. You got to cut price.
She's really ahead on this lettuce story.
Good one. Good one.
You know what you can't do with lettuce? Is just put it in inventory and sell it another time.
No, you can't.
You got to mark the price down and see what you can.
As we talked about earlier, lettuce has a very, very short shelf life.
Exactly.
It's got to let us move on. How long do we have? How many months does it take, Steve, to make a trend?
I mean, we say 3, but that's like, you know, there's no official aspect to that.
Yeah.
But no, if what you're saying is we have 2 out of 3. Wasn't that a song? 2 out of 3 ain't bad.
That's Meatloaf.
That's Meatloaf.
That's another food reference.
Another food reference, but we have 2 relatively benign. Okay, I don't want to throw. Well, I guess that's what I do is throw cold water on parties here a little bit. That's part of my job. But we've had this cyclical kind of thing where inflation's gone down in the summer and come back again in the winter. It's this thing called residual seasonality, and I'll make English out of that. But residual seasonality is we seasonally adjusted the data, and we still have seasonal adjustments. We still have seasonal issues in the data. We thought we took it out, but it didn't all come out. So, for example, we think we adjust for price changes in January, and we still see price changes in January. That's residual seasonality.
And it maybe had an impact on last week's jobs number, all the rest of it. Rick and Steve are sticking around. Let's bring in our panel. Michael Strain is the Director of Economic Policy Studies at AEI. Kitty Richards is a Senior Fellow at Groundwork Collaborative. She also served in the Biden Treasury Department. Welcome to you both. So Michael, I mean, not a dramatic market move, but largely as expected in a benign fashion on CPI.
Yeah, to continue with the Meatloaf reference, I don't think we should see paradise by the dashboard light here. I think this leaves the Fed in the same place it was in before the report came out. This 0.2% monthly figure was right on the bubble. I think anything below this, the Fed could have had a lot of the pressure taken off of it. Anything above it would have been a clear signal. I agree with Steve, of course, that in order to figure out what the PCE is going to be, which is the index the Fed pays the most attention to, we need the PPI data for tomorrow. But the data we have this morning is consistent with core PCE coming in at a 3.3% annual rate. That is up considerably from this time last year. It's actually up considerably from 15, 16 months ago. And I think that leaves the Fed in a hard place.
Mm-hmm. Yeah, I mean, Kitty, there's no doubt that the Fed's in a tricky spot. Maybe it often is. But at least these numbers don't seem like there's the penalty for waiting is particularly large in terms of tightening.
I think the Fed is in a really difficult spot, and it's worth remembering that the other side of the coin that they are dealing with is a really disappointing jobs number last week. And thinking about how to conduct monetary policy in a situation where you've got persistently above target inflation that is bouncing around, but not yet a trend in the right direction, coupled with a softening labor market. We saw job losses last week. Most of the job growth over the last year, it's been anemic, and most of it has been in healthcare, which is, it's great that healthcare is hiring, but that is not a great sign of the overall health of the labor market. And so the Fed has to really balance those things as they're thinking about how to deal with interest rates. And they're not in a great position to make that decision. And I'd add to that we've seen a resumption of hostilities with Iran and a resumption of Trump's trade war tactics, and those two things are really adding to incredible uncertainty over the path of the economy, and uncertainty can be very, very costly.
Kitty, I just want to make a very small point, and then I'm obviously bring in Rick here. And I've made this point a lot. The Fed is always in a box by definition. The Fed is always in a tight place. If the Fed is not in a tight place, it's not doing its job. When was the Fed not in a tight place? When inflation was high and it had to raise by 75 basis points over 4 meetings. The Fed was not in a tight place then because there was no question. When the Fed is doing its job, it's in a tight place because there's this delicate balance between the two mandates. So when somebody tells me the Fed's in a box, I just want to make a point. The Fed's job is to be in the box. Wants to be in the box.
Right, you want to be somewhere close to that
somewhere
equilibrium.
Close where it's a difficult choice to make. That's what it does. I'm sorry, Rick, go ahead.
Well, no, I don't question that. I do look at the probability since the number was out. We've gone from like 45.5 to 44%. So hardly any movement. But the point is, if Mr. Warsh wants us all investors, meaning to decide where the Fed's going to go by how we interpret, how we trade, what our footprint in the market is. Right now, there is not a call by the markets or the investors that make up the markets to raise rates. And I'll stick with that. I think that where interest rates are now has snugged up in terms of inflation. 7/8 of the inflation picture was there. What's left is what's going on in the war. And that uncertainty, in my opinion, is the whole key to whether we get a hike or don't get a hike based on the longevity and how much more input into the inflation scenario high energy prices and issues bring. The AI story, that's completely new. I'm not sure how the Fed's going to work around those upward pricing pressures and things like chips, but ultimately that is the area I think we need to pay more attention to.
Can I push back a little bit on the high energy prices theme? And I want to give you another hot take. Oil prices are up, and oil prices and gasoline prices matter. But you know what's not up? Natural gas. And natural gas is a key ingredient in plastics and so many things that we buy, even cosmetics and pharmaceuticals. So with natural gas prices down, I wonder, Steve, if that's mitigating, and it's an open question, we can unbox this, mitigating some of the impact of the oil price. I don't know. Maybe I'm
looking
wrong.
up data to contradict you.
Okay. Why?
Because electricity.
Okay, well, yes.
So that's something that people pay for.
Up 17% on, I think, on average.
4.2% year over year on the consumer price index.
17% jump in New Jersey year over year in electricity prices.
Right, but overall in the country, 4.2%.
But I only care about myself.
I know you do. Can I ask Michael Strain a question? Michael, I want to get this off of my chest here. This question here: does Kevin Warsh have to hike rates to prove his credibility to markets, given where the 2-year is trading? And Rick, I know you have a lot of thoughts on this, but please hold back for 1 second.
Look, I think a lot of that depends on your view on what the Fed should be doing based on the data. And my read is pretty clear. The unemployment rate has been at 4.1 or 4.2% for the past 2 years. It is low and it is stable. Financial conditions are easing, not tightening. And core PCE inflation is accelerating and has been accelerating for more than a year. And this report does not indicate that core PCE is going to begin decelerating in July. So I think the Fed should be raising. I think the Fed has its foot on the gas pedal when it thinks it has its foot on the brake pedal. And so if you view the economy the way that I do, then I think Chairman Warsh's insistence that getting inflation back to 2% is his #1 priority suggests that he should be raising rates, and there's confusion about why that hasn't happened yet.
Kitty, you agree with Michael on that?
I actually want to go back to what you were saying earlier about the Fed always being in a box. And I think that what Michael is saying, along with the story about energy price increases, is a good example of how, in fact, this Fed is in a box of Donald Trump's making. The war in Iran and the trade war have been driving up prices and squeezing the wallets of American consumers, who then are cutting back in other areas, and that is causing ripple effects in the job market. And also, meanwhile, he has so vociferously attacked Fed independence, including restarting his attempts to fire Lisa Cook this past week. that the markets are uncertain of whether his appointee to the Fed is going to do the right thing based on the data. And I think those
Uncertain
things
markets
really
have
add up.
peculiar movements. You know what? Confused markets mean that they have strange movements. They have anomalies in how they trade and how they price. Don't see it anywhere. Don't hear much in the market screen about a trade war.
The question that was just asked was, can we trust Borsch to make the right decision, and does he need to hike just to prove it? That is not a question that we would be asking if it weren't for the attacks on the Fed's independence. Well, I'll let Steve answer that.
Attacks on Fed independence. Attacks on Fed independence means nothing. It's just an armchair talking point for people that like to monitor the Fed on their weekends when they put their newspaper
It's a multi-trillion-dollar question, Rick, for people who have to run bond portfolios.
It might be in your mind, but if it really was, it would have an effect in the markets.
No, Rick, you're wrong about that.
Stocks basically make new all-time highs, and interest rates aren't at their highs.
You're $100 trillion wrong about that.
I'm 100% right. You just like to talk about the Fed because it gives you a place to hide without being right or wrong.
Rick, here's the deal. If I'm running a big bond portfolio and the Fed doesn't have my back on inflation, that matters a whole ton to me.
And what would you do if you were running a big bond portfolio and they didn't have your back and you're worried about inflation? You'd be selling bonds, pushing yields up. Sorry, not really seeing it lately.
Oh no, 466 is what? How many basis points higher than it was just a few months ago?
It's the war. It's the war. Look at Feb 28 chart. The war.
I'll agree with you there, Rick. There's a lot in that.
I don't care
but
if you agree with me.
The bond market is like, okay, you're going to give me more uncertainty, pay me. That's fine.
Sorry, sorry. Maybe that's your bond market.
Rick, there was
not mine.
Rick, there were a lot of movements in the bond market during the last press conference.
Yeah, no, it's true. A lot of movements within
I think
a range.
I think a lot of investors who look at the economy the way that I do were wondering where the rate hike was, and I think we saw that reflected in increases in the 10-year and the 30-year and decreases in the 2-year.
Futures.
Michael, you recently wrote a paper arguing that the uncertainty created by the firing of the BLS chief
All right, joining us now to talk about the impact of inflation, the state of the consumer, and the growing global running market is Berkshire Hathaway-owned Brooks Running CEO Dan Sheridan. Dan, we just had this sort of fiery discussion on inflation. You're probably sitting there listening, thinking, I live this. I'm buying plastics, I'm buying foam, I'm buying fabrics, I'm shipping it, I'm transporting it. How do you, Dan, and welcome, by the way, and good morning. How do you see inflation and the consumer right now?
Yeah, thanks for having me, Brian. So look, I think we just finished our second quarter and our results are incredible. We grew 14% globally. It's a broad growth story for us. And yet, you know, we do have a lot of headwinds ahead of us. We're seeing it not only in trade with tariffs coming back into our category, but we're also seeing it in cost of goods with the conflict in Iran, the cost of oil. All of that puts pressure on our margins and our partners' margins. So it is we're not out of the woods yet in terms of what we're balancing here as a business globally.
But is the consumer seems able to deal with it. And I know we've got some of your competitors, On Holdings, which is the parent company, On Cloud, that stock's down 20%. Nike's been a disaster. I'm not mitigating the impact to some of your competitors out there, but overall, the consumer seems to be able or willing to deal with some of those higher prices, yes?
Yes, I think we would agree with that, specifically in our category, which, you know, over time, our category has been a pretty resilient category. You think about the fundamentals of running, health and wellness, and fitness, that consumer will choose to buy a pair of shoes or a piece of apparel for their use. And so we've seen that over time, and we're seeing it now. It's a very healthy category. Globally, the running category is about $45 billion. And it grew about 10% in 2025. We're seeing growth in every region for us right now. Our Americas region growing about 9% through the first half of the year. Our European business growing 39%. So we have really strong growth based on a very healthy consumer.
Running category, Dan, globally growing 10%. Obviously, that's faster than general consumer spend. So what do you think is behind that? Is there some excitement around some of these records? Is it the technology in the shoes?
Yeah, I think it's broad-based, Mike, is how I think about it. It's a group of people around the world that are investing in health and wellness first and foremost. We've seen that trend since COVID. But I think innovation and performance is at the center of everything. We just had Josh Kerr break the 27-year world record in the mile. He did that in Brooks shoes and apparel. And this is epic athletic achievement that trickles down to the everyday athlete, that's inspiring and gives aspiration to everyone that wants to move. And so this is something that is driving our category. Performance products matter in people's lives. Why Brooks is leading in most markets right now.
Are you seeing a correlation with GLP-1s and the ubiquity of weight loss drugs in terms of, incentivizing people who may not have previously been runners to run? And then the flip side could potentially be because people are slimming down with the drugs, maybe they don't feel as much of a need to exercise.
Yeah, Leslie, I think we are. I think it's broad and general, though. I don't think it's just GLP-1s. I think most people, no matter where you are in your life, are starting to focus on longevity, on nutrition. We know all the statistics in less alcohol consumed. I think GLP-1s are a part of that. This is great for our category and our business. Ultimately, more people have access to physical activity. We see it around the world. Our China business is up 127%. China is investing in health and wellness, similar to the U.S. here, and so it's a broad-based, health and wellness theme that's driving participation in our category.
Can we just have a little fun, right? We're talking about serious stuff. Let's talk about Josh Kerr, okay? Scottish guy, 3:42.66, 3 minutes 42 seconds 66. He ran a mile at full speed. Faster than I could ever hope to run at the fastest point of my life. This guy ran an entire mile. Dan, honestly, how fast can humans go? I mean, how long will this record stand? This is the level of speed this guy showed is insane.
It's insane. And let me give you another stat. If we broke the mile down into 40-yard dash increments, he'd run 44 40-yard dashes in 5 seconds. That's what he did. He ran 16.2 miles per hour for that race. This is epic athletic achievement, and Brooks is at the center of it. What we do every day is we innovate through our R&D in our lab here in Seattle to improve performance in athletes' journey. Josh is the epic athletic achievement, but this happens every single day around the world. It's why our business is so strong right now. We're serving customers the product they need to improve their lives. And Josh is just the perfect example of that. He called his shot in March. He said on July 18th in London, I'm going to break the world record in the mile, and he did it. Quite an inspiring story.
It really is. And I think it maybe, I don't want to say reinvigorated running, kind of Leslie's point, but like the fact that now we're talking about the mile again, he breaks this long record is just, I couldn't believe, he didn't just touch the record, he destroyed it. Dan Sheridan, thank you very much. Really appreciate your time.
Thanks for having me.
Up next, CoreWeave popping 20% in the pre-market. That story and other headlines from this morning's show. We'll be right back. Breaking on Squawk Box this morning, inflation data came in line across the board. Month to month was up 0.1%, year over year 3.4%. Shares of CoreWeave are up higher this morning after yesterday afternoon's quarterly report. The stock is up almost 20% in the pre-market after Q2 revenue doubled from a year ago. Wells Fargo telling clients it remains negative on Tesla, reiterating the firm's underweight position. Wells Fargo says its channel checks show that Tesla deliveries trended lower for July. The stock is down 33% since Christmas. And Goldman Sachs is buying ETF company Neos Investments for $2.25 billion.
All right, take a look at futures. Equity index futures did firm up after that as-expected CPI report. The NASDAQ 100 indicated up by almost 1%. The S&P 500 down 1/3% this week. Going into today, maybe going to get that back toward break even if these gains hold. Make sure you join the three of us tomorrow. Squawk on the Street is next.
Good Wednesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. Plenty of food for the bulls this morning. Solid reports out of CoreWeave, Nebius, Supermicro, and then July CPI comes in solidly in line, 2.5 on core. Goldman says that does support a Fed hold in September. Brent's holding 88 as this attack by the Houthis on the Red Sea tanker kills 6. An Iranian source tells Reuters there are no talks right now to extend any ceasefire. Our roadmap begins with the inflation trade, what CPI means for the Fed's rate path. Collins says she's still open to a hike.
Plus, CoreWeave shares are surging this morning. This ahead of the open after reporting its 5th consecutive quarter of record revenue boosted by AI infrastructure demand. Company CEO Mike Intrater is going to join us first on CNBC right here at Post 9 in a few minutes. And forget rockets. Hear what Elon Musk told SpaceX employees will soon be the biggest driver of its revenue.
Let's get right to this morning's inflation data. Important numbers out of CPI for July. Jim, 2.5, we said on core, a 10th on a monthly headline. I guess a familiar sound. Gasoline up 24 year on year.
Yeah, look, I think it's meat, poultry, fish, eggs. It decreased appreciably 0.7%. You know, last night I had the Cisco CEO, Kevin Herkin. He said that the local restaurants are booming because they're passing on these price decreases, not the national guys. David, the price decreases are actually a welcome sign for what had become a belief that is poultry ever going to come down? Is steak ever going to come down? So that and insurance are the two things that are very reassuring. The other stuff I think is variable.
Yeah. What other stuff being what, Jim?
Anything related to energy. I mean, this is just, if someone says that this is the month that the Fed can hold off because of this number, I think what they're saying is they're actually making a bet that energy is going to come down. Now, they're not going to say that, but I just don't see anything in this that makes me feel that confident of the food.
Yeah, and of course energy continues to be a key question mark in terms of the Strait of Hormuz and
exactly right.
The trying to put a chokehold around the Iranian economy and whether that really will actually work.
Yeah, if anyone's going to send a tanker through, I don't think any responsible CEO is going to send a tanker through. I mean, there's someone obviously is not responsible who goes against the U.S. Navy. I think that's kind of foolish.
Yeah, you can see though Brent is down over the last few hours. Right.
That said, the prospect of no hike this year is pretty tantalizing for the bulls. I see Yardeni today goes to year-end 8,400. That's a street high.
Well, look, I mean, if we're not fighting the Fed, you have so much that is going for you. I mean, we sit here and we look at the research, and almost every single company, the estimates are going higher. And this apocalypse, which now people are talking about, I mean, like, hello, ServiceNow down 4 today, but I saw people taking Salesforce up. The price target, shocking. There's gambling and there's Salesforce.
Yes, there is. And what do you think about that?
I think that they're following the price because that's what analysts do.
Very good analysis, actually, Jim.
Thank you.
That
Thank
is
you very much.
typically the case. It's still lost 25% of its market value, but it's been a lot worse during the course of the year.
Yes.
Well, it's the kind of day, though, where semis and hardware are going to take the lead in that seesaw action versus software. Jim, we didn't even mention Lumentum in that list of companies at the top.
Boom. You know, look, anything fiber, you can take a lot. Fiber is very exciting to people versus copper, which is Freeport. I don't want to just buy Freeport. Look, I think that what happened is Korea was up last night. And Korea's kept the lid on a lot of stocks. And Korea had been down a lot, and there had never been, there was no post-Leopold bounce there because of all the ETFs, and they were unwinding the double-double.
So many things going on. They got the double-double, they got the triple-double, they got the triple Lux. It's all sorts of stuff.
I know. It's
followed
just,
by the Lindy.
It's the Olympics.
Yeah.
It's the Olympics of
it's the Olympics
of DRAMs.
of high stakes investing in Korea every day.
Every
and
day.
they just start anew. Next day.
They have bars where there's just an immense amount of buying of the stocks of DRAMs and XX, and we don't have those bars. We lack that kind of bar. We still have bars where you buy like Modelo.
Yes, and we have sports on still.
Yes.
Instead of the stock market, although we encourage them to all put CNBC
if I own Bar San Miguel still,
yeah, what would you do?
Oh man, we would have it just lined right up, and we would be. I'd take Intel over the over 100.
Do you have Kalshi or Poly Market as well in there? What would you?
Well, I have that. Whoever one's going to pay me more has the right to be able to be behind with a sign above the Modelo.
Right. Kalshi now at a $40 billion value based on its most recent raise. I can confirm that as well.
40 billion. Okay, how about 50 billion? Let's take it to 60 billion. What's the problem?
Okay, I'll take it then.
60 billion.
As far as the CPI print goes, there's still chatter about this one really, unless it was a huge surprise. Right. It's really Jackson Hole that's going to be important for the markets.
Look, I do think that food really matters. I don't want to. I mean, look, food's been a runaway train. It has been. It's been a runaway freight train. David, food is where gas pump, and when you go to there's these things. It's really incredible. There's aisles. There's
I'm
food.
aware of what a supermarket is. I try not to go into one too often, but I do.
Okay, then you know that when prices go up there, that's how people.
I'm aware. I think people are still the rise in prices was so dramatic, in the inflationary period following COVID. During that period, people are still adjusting to that.
Yes, they are. And look, some things haven't come down. Look, this had a break in shelter. Is shelter really coming down?
Yes. Yeah.
In some cities.
Yeah.
In some cities,
Austin, Seattle, Boulder, Florida.
Boulder?
Yeah.
Like
they have
huge.
They've done something.
Florida.
It's called adding capacity.
Well, no, but I'm saying,
helps.
okay. So all right, let's give it that. I guess I'm too little New York centric where. It's like, people are paying fortunes to be next to the Gowanus as if it's like the Arno or the Po.
Yes, the Gowanus is a beautiful canal where gondoliers.
There's 5,000 units came up next to Gowanus and they were sold out
Gowanus
immediately.
is one of the hottest neighborhoods.
And rent is still at an all-time high in New York.
Why is the water
because
blue
we
and
aren't
bubbly?
adding much capacity. That's one reason.
Why don't you go swim in the Gowanus?
Not yet. Not yet, my friend. One of these days.
Yeah.
Yes.
Good. Wear a swimsuit.
Let's get to CoreWeave this morning. Surging on topping estimates, doubling revenue. This is Mike Intrader on the call last night talking about demand.
All in, we have excellent visibility to our target of at least 8 gigawatts by 2030. Woo! We expect demand to meaningfully exceed supply for years. Our near-term capacity remains effectively sold out.
We're going to talk to Intrader in a few minutes. Backlog, really the story here, 104.2. Jim, that's 40 times this quarter.
Look, this was a breakout quarter, a true breakout quarter, which makes it seem almost ridiculous about where CoreWeave is. It doesn't even, you think back to see this thing came to 40. It turned out to be an unbelievable deal, but this was the quarter that you're going to remember as that NVIDIA, if you buy it, and you build data centers, they're worth a great deal, and it verifies, David, exactly what these banks and NVIDIA are doing.
Yes. They will be a key beneficiary, one would imagine, if you can actually get lower financing for GPUs,
And
correct?
I think they will,
And
because
we'll talk,
already
obviously,
he's
we're
had
gonna-
much lower. We
we're gonna
haven't
talk
pointed
him
to Mike
about that.
Mecklenburg.
Yeah, he's right here, so we'll talk to him.
But he's very important.
He is, yeah. It's reflective of a larger cohort.
Yes, but he's the face of the data center now after this.
Is he? Really?
Yes.
He's the face of the data center.
Well, okay, well, Jensen.
Does he know that over there? Have we told him?
Well, look, okay, we have the most important guest in the most important sector, and we have him on in a few minutes. And if we decide that he's a serious person, then I think there's no way that you can keep the stock down.
There's a lot to get to with him. They extend this one contract for H100s, I think, A100s, to 29.
I thought that A100 was worthless. That's what everyone told me. They told me A100, there's a guy. What's his, Burry?
Oh, yeah, Michael Burry's.
Burry's at BU or a while ago from Philly.
But Jensen Huang had some things to say about the depreciation of chips such as
Okay,
that
so,
one,
yeah.
and the fact
See,
that they are
Jensen-
not depreciating anywhere near what people thought they
Jensen may
would.
be talking his book. This made Intrader's not talking. You know, Intrader's got the actual numbers. That's what I'm saying.
Everybody talks their book, Jim. Everybody.
I bury.
Everybody.
I've never talked.
We're going to get to Trader in a few minutes, talk more about the data center and CoreWeave in particular. We'll get to some other names as well. Oracle, SpaceX, there's some Kava, Brinker News, Lilly, Goldman. Stay with us.
What's up? I'm here. Oh yeah. Can do it. Okay. Well, let's put this on the 5-day, 5-minute real fast. Oh, we've got a real hard resistance at the orb. And we got a triple top, quad top. So it was fun to listen to him shimmer this morning on Squawk. Using the Fed. I agree with Steve. We do not need to raise rates. Powell was way too late at doing it. We had inflation up 21 to 30% in Missouri, like overnight, under Biden's watch. They refused to believe it, and they kept them interest rates low. Powell did a shitty job. And that's a fact. Now they're putting all the blame on this administration for what they failed to do during the Biden administration. It's just, I've not seen any inflation. None. Actually, prices are lower than what they were. I don't know what they're whining about. We had a war on oil. We had 10 wars going on, but they weren't complaining. Now we don't have a war on, well, we have Iran, but America doesn't have a war on energy like we did.
This morning, revenue doubling in Q2 on accelerating AI infrastructure demand. That is just too calm, frankly, because this was some quarter. Joining us now here at Post 9, first on CNBC, is CoreWeave founder and CEO Michael Intrader. Hey, Mike, good to see you.
Well, there's the guy with the money.
I'm asking a question that I think may end a debate. I was struck by, when I listened to you, that the GPU depreciation debate, which is right in the wheelhouse of a lot of people, is over, and instead the NVIDIA $500 billion financing platform seems very much alive. Despite the two naysayers, I wish you would just kind of comment, because on your conference call, no one asked about NVIDIA. It's very strange.
Yeah,
Used cars
first of all, thanks
were
for
up
having me.
30%.
Appreciate coming in and talking to you guys after earnings. Because this earnings a little bit more fun than perhaps some of the others.
We had supply chain issues. We had all kinds of shit going on. Running out of toilet paper, running out of douches for the women. Diapers were low. 77463. Whoop. Oh. Okay. Let me clean the house here. Boom, 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 boom. Boom.
Parks, they need
YouTubers. Good morning, Stone. Good morning, Arm. Did we have a good CPI? I think they're dumbfounded. It wasn't as bad as they wanted it to be. We've had 2 real good days, sell-off days. I mean, just like flushes. Okay. I've got sweaty fingers, already nervous. What the fuck here? Very good. Oh. There we go. Okay, I got it figured out. We're about to hit resistance. Boom. They said they ought to raise rates just to build confidence, only to build confidence in Wash. That is a stupid way of thinking. Just to do it to do it. And then watch the market tank. And then they say, well, we told you so. And we just hit resistance. We told you so. Let's go over the watch list. Oh, how many times? I got 9 minutes. SpaceX. I'll clean this up. Oh, we got NVIDIA. Again, they had some good earnings come out again today. NVIDIA, not NVIDIA, but we got Marvell. It's a buy the dip attitude. This is what they're doing to you. Now we're all at resistance. SPY at resistance. We got Anchor at resistance. Apple pulled back, so Apple's on watch. IWM. Big breakout on IWM. AMD called that one out yesterday on this here trend. Those are my 3 resistance levels. And we got Mister up this morning. Google on watch. Amazon called out yesterday on the bottom 5-day low. Now pulling back. Ooh, look at that. TSM. And we got MU, I think. MUU7U? Are you serious? MU's topping out at 910. We got SanDisk, the SanDK. SN, what is it? SNSS or XX? Or X? No. Randy, what is it? CPI in 6 minutes? Really? CNBC sucks. What's SanDisk is code? SanDisk what? What is that? S something or SNXX? We broke resistance today. So support right around 1086 for the first one. And resistance $12. coin, no. Apple. Where's my other CGC? We got Intel up today. Intel's at $106.60. Elon came out and said AI is generating money. I doubt if we have any cleavage today. I don't know, hotter than hell outside and there's no cleavage showing. I put on my sweatsuit yesterday and was walking down the street, 95 degrees outside, and acting like Rocky. People, I was getting all kinds of smiles and laughs. I stood at a street corner kind of bouncing back and forth, wobbling, weaving in and out. And I seen two people in a truck just laughing and smiling. I pointed at them. He gave him a Sophie point. Oh, if you want to get broke, you can do it. If I can do it, you can do it too. I went to a senior college where I didn't want to feel like I was poor, so I got in debt. If I can do it, you can do it too. Oh, baby. Come on with the cleavage shit. No, look at these turtlenecks. The girl's wearing a sweater. You're fired. Both of you. SPX, I'm going to say, is going to open up in this right in here. I always trade better when I got the little cleavage shot, but let's see if I'm right. VICTORY. That's my battle cry. Right to the penny, boy. Uh-oh. I'm going to put an alert on the 63. What time is it? We got less than 2 minutes. Are we nervous? Or are we scared? Fuck. SPX options are... What? We'll have to wait and see what they're doing. Oh my God. Oh. I'm going to guess 777 on SPY. 777 or 780. And that's going to be my first trade. It's a guess. What do I got here? I might have to quit drinking coffee, I think. All this oxygen I'm getting now. And I got a guy that gives me a shot of coffee in the morning. Espresso, I'm going to have to tell him no more. I'm back in my medium shirts. Ever since I got my new socks. 777s aren't too high, and the 7790s and the SPX 7780s, if we pull back, and the 775s on the SPY. We're at our first support. At the 10, then we got 773, 656. Triggered. SPY. We got the VWAP coming up on the SPY. Prepare ye in the name of the Lord. This is it. Oh, I didn't see what account I was in. That wasn't too bright. Seven 77259. And we're coming close to the 200. Two engulfing candles on the 1 minute. And there we go. Time to make a difference. Seven 774s are at 106. My risk. We're under the VWAP. We're kind of squeezing, so we're not really bullish yet. So just be careful. Wait until, give it some time. I'm just looking at the 3 black crows off the 200 with it still might have sell off. We got 77150 for low support. And we're at the VWAP. So it's going to try to make up its mind. Might as well just trim it now. We're at the 10. Get into my other account. I got out of it. I'm gonna get into my good one. We had a little pullback. Hey, Randy, we pulled back right here to support on SNXX. First one for scalping, not for trade swinging. Just your first support. You got a gap to 1040. What did I get out of those? SPX. Meta's pulled back. AMD's pulled back. Ooh, what's this? Yeah, you're getting almost to support on SNXX. IWM, I got 30201. Do this. Now I gotta clean all this junk out of here. I got a lot of. Okay, spot at /ES is at the VWAP right now. /ES is at the VWAP. We got 7768 right here, so this is where it's got to hold. Right here. Come on, you idiot. SPX, the 7770s. Not that. No volume. Too much things froze. Seven 7770. So Wall Street's not happy. Because they didn't get their high inflation number they wanted. They're going to take it out on us. Where the fuck? There it is. SPX is under the 10. And we got a triple bottom. Looks like the bears are still alive. Yep, they're pulling it back. It's still bearish unless we break this. And then we got a double top. Wall Street sentiment is still bearish. Now, I think we're going to come sit here at 6776864 if we don't hold this. Right now, we're at the 200 on /ES, but we're bearish on the SPX. We're going to find out if we're going to hold it. What's SPY? We got a harmony, but I don't know how long that'll last on the, oh, that's 1 minute. I need to put the 2 minute up here. Two minute, we're still bullish. 1 minute, we weren't so bullish. Okay, we're back up to that resistance channel right here. I sold it. Let's see if I did the right thing. $100, 113 bucks. So that was the first trade. It's funny. Unreal? Did you get it? Yeah, 2 minute chart's better than 1 minute so far. You didn't get it? Randy. Jimmy said get it. I was just what, 10 cents off? 7 cents off support? Give me an A+. Magnificent. Get out of your cave. A plus, very good. Sipping telling yourself. Well, it was a wedge. I just now noticed we had a wedge on it. Don't. That's beautiful. On the 1 minute, it's more defined than the 2 minute, but the 2 minute hit the 200, boom! On SPY. And on the SPX, the VWAP off the 200. So I think I got in a little early on that one. If you want to give me an A, small A, it'd be getting in too early. Always clean as Jim. Did you get the wrong number again? Here, what's going on here? Oh, there we go. Are you still here? Hello?
Oh, there we go. Now I can hear you.
Yeah, okay.
Yeah,
Yeah,
this is Gary. Really quick.
this is Jim.
Yeah, I got a missed call from you, and I passed it up somehow. I wanted to apologize and give you a call. We wanted the price on the 42-inch, the cheapest 42-inch mower.
Yeah, well, yeah. In the Skags and the Spartan.
Yeah, the Spartan is the cheapest one. I got a 42-inch with a Kawasaki motor for $44,399.
For how much?
$4,399.
Oh, that's good. 4,399.
Yep. And I'm sorry I missed your call. I don't know. I skipped over it somehow.
Oh, that's fine. That's fine. Did I call you today? Yeah, we had a missed call. Yeah, you had a missed call. You tried to call me, or you were trying to call someone else, and I called you back.
That's that day.
Yeah.
Okay, yes, sir.
But I'd be interested in that. I'd be interested in that Spartan. Couple grand down, finance the rest, is that how it works? Okay. Exactly. Go ahead and call the police. I'll be up there Friday. Well, I'll be up there Friday. Does that sound good to you?
Yes, sir.
And who's it? Yeah, who's this? Gary, okay. I'll be up there Friday. I bought me a little Toro 22-inch. Kind of just push around with it. But I got to take care of this grass. It's about a foot and a half tall. You think that would cut through that? Okay, sounds good. I'm very interested.
All right, thank you, sir.
Okay, thank you. No, thank you. You just have one in stock, or?
I can look and see if I have one, but right now I have one out there that's put together and sitting out there, yes.
Okay.
I'll go look and see if I have some more.
Yeah, if you got one inside, that'd even be better. Okay, well, I'll be up there definitely Friday. Okay, thank you very much. We're back at support. I got my lawnmower picked out. Let me get to her. Okay, where are we? Option chain. We're going to move these up to 77.60. Come on, you. What the hell? Okay, I don't want that. Just clear it. Clear, clear, clear. Thank God I waited. 7738. Spartan lawnmower with a Kawasaki. For $4,300. We're at 790 now. I didn't buy it. We held above the 20. So, you know, once we're below the 10, we're not as bullish. But as long as we hold the 20, we're still good. And I'm not trusting it because we're under the VWAP over here on the /ES. But if I was to look at this, I would almost take it. But here I ain't. I'd almost take it right here. Damn, that's $100 and some bucks. I would have a tendency of getting in a little bit too late on these. And then they dip. Then I gotta buy. Now I missed that one. Tweezer bottom on the 1 minute. Oh, that's 2 minute. Let's get this to the 1 minute. Get these things backwards. Yeah, I gotta look at the 1 minute. We're still bearish. We're under the VWAP. We got a megaphone on /ES. Well, they're going to numb through the numbers and say, well, I'm going to do a Santelli imitation. Well, there wasn't much difference on the CPI.
Google debuts its Pixel 11, 11 Pro, 11 Pro XL, and 11 Pro Fold phone. Google is raising the prices of new phones on severe memory crunch. So the new smartphone starts at $899. The foldable costs $1,899. New phones are $100 more expensive than the last editions. So Google announces an upgraded Pixel 5 watch as well, which is starting at $399.
Google upgraded Pixel watch. Patience. We're at support.
Both shares little changed following this announcement. They're still down 0.1%.
No. This, if one stay bullish, this is it. Right here. Set a stop loss. Oh, God. Oh. Come on, Jimmy. Yippee-yi-yay. We got a megaphone, 3 black crows. So this is your flag. We're under the VWAP, so we're still bearish. Wait for the 200, 773844. Maybe on the SPX. Seven 3844. I mean, we're definitely at inverse head and shoulders off of a megaphone. I mean, it could bounce. Or we could do a double bottom at 7766 something, 18. Now, here's a yin yang. I really kind of tore into myself last night after I got out of here. Oh, dang. Triggered? No? Yeah, 4-6.
Alphabet shares touch a session low now, last down 0.5%.
Google. Google knife. Google devices chief, Pixel and iPhone are going in very different directions. Oh, the yin yang was right here. I think I said it wrong. Okay, we're getting close to a yin yang. 7760s. Triggered. Three black crows in the middle of the night. And I got one. Position. Got one. Where did I? Here, come on, you freaking idiot. What did I get it at? 640. It's got a break right here. I'm in at 640, the 7760s. Right now we're still bearish. Just playing this hammer. I got 10%. I could take it and be happy. We're still bearish here. Two-headed snake. Should have been happy with 10% today. No, we still could hit the 200. That's my problem here.
ISNA report that Pakistan's interior minister arrives in Mashhad, Iran.
What's that going to do? More bombing? Not nothing yet. I'm tempting to get out of it. The only thing keeping me in this trade is this hammer and this inverted hammer. There we go. Come on, you bitch. I'm not trusting this thing a bit. Not that I'm under here. I sold it. It could break. I made $83. Still bearish. We got the, I don't want to take the risk. We got the 10 crossing down over the 20. The only thing kept me in the trade was this and that hammer and this inverted hammer. But we're still bearish. So I think I was okay on that one. Now watch it break. Fuck. Now what's this? What did I get? Oh, the 60s. Oh, yeah, they're dadgum. No, I ain't bad. Okay, I'm cool. I sold them at 7. They're on this kick that they want to raise rates to bring this market down. That's the underlying message that Wall Street's trying to send. Because they're totally got TDS. So just kind of keep that, they're very biased. That's my attitude anyway about it. So you just got to be real careful. What'd I get them bastards at? Order, I got them at. Oh, I tried to sell one at 67.20. That ain't gonna work. No. I got filled at 640. Now we're back down to my entry. So we're still consolidating. I think we're going to head on down to the 200. I'm going to get me a Spartan lawnmower. 42-inch. Something small, not big. I don't want a big one because you have more problems. Just get a small one. That's what I'm going to do when I get ready to retire. Mow yard. Keep me occupied while I'm trading stocks. Go out and mow a half an acre for an hour and get back in. Or an acre. So the 7760s are at 640 right now. I'm really not gonna. We got a flag. We got a bull flag. I'm still bearish. As long as we're under the 9, we don't want to go crazy, right? Under the 10, under the 10. I'm going to go. I got me some new tea I'm kind of liking here. Might be in today's commercial. Splunk. It's 45 minutes. Okay, I'm gonna send. Is Lizard in here? What's your IWM? We're not.
The State Department unveils a program to speed the logistics for key AI goods. The State Department's AI goods program is part of a Pax Silica initiative. The state's AI goods effort is to begin as a pilot program in Panama. Abbott, Google, and Rowan are to comply with data center standards.
Oh, watch my... Jimmy, what are you doing? I gotta pee. That's what I got. Oh! No. Now we're getting above the VWAP. Oh, up $100. The 7760s at my bottom. Who wants to chase this? Oh, it sucked. Like $200 trade right there. Oh. Now we're above the 200 and the VWAP. Whoops. Still couldn't break it.
In 10 minutes
now,
at the bottom of the hour, we see the release of the weekly EIA inventories numbers. Crude oil inventories forecast to draw of 1.8 million on the prior build of 2.479 million. Gasoline inventories forecast to draw of 1.1 million on the prior draw of 1.643 million. Distillate inventories forecast to draw of 2 million on the prior draw of 3.473 million. And crude Cushing inventories, the prior was a build of 2.356 million. Keep in mind, yesterday we did see the release of the private API stock change number, which showed a surprise build in crude oil inventories of 9.072 million compared to the expected draw of 0.5 million.
Tess, anyone watching? I got pee. There we go. Shit. That's twice I've missed this now. We've got higher lows. And now we're just now starting, but we're under the... I got pee. I'm gonna pee. I got pee. What's your next resistance? SPY 77278. Are we bullish? I am if we break the 200 on the /ES. Here we go. I'm not sure. SPY's at the VWAP, so not yet. SPY's at the VWAP right here, so I mean you're double. If we break the VWAP, we're going to break out a little bit and pull back.
Time now at the bottom of the hour. We see the release of the weekly EIA
Not yet.
numbers. Crude oil inventories
Wait.
forecast to draw of 1.8 million on the prior build of 2.479 million. Gasoline inventories forecast to draw of 1.1 million on the prior draw of 1.643 million. Seeing Interfax here reporting that Russian Defense Ministry says that Russia strikes a vessel in Odessa port.
Russia, you fucking suck.
The EIA. We also have the distillate inventories at the bottom of the hour, forecast for a draw of 2 million on the prior draw of 3.473 million, and crude Cushing inventories. The prior was a build of 2.356 million.
So we're really at a real solid wall. If this wall breaks, and we can build a body, a candle up there, wait for that thing to pull back to the VWAP and then take the trade. But right now, we have a wall, and you don't want to take that risk.
Israel's Defense Minister Katz says the IDF is to remain in Lebanon, Syria, and Gaza security zones.
77297.
Katz says, I've instructed the IDF to prepare for a long-term stay.
Now we're starting to break it. Nah. Shit. All of a sudden. Okay, now I gotta wait for the pullback. Ooh, that hurt. We're at the top of that resistance channel. Now on the 1 minute, we were bullish. Two minute we were not. Now we're just starting to cross. So the 1 minute we were bullish. Might just have to go back to the 1 minute on these.
1 minute remaining. I'll leave with the EIA crude oil inventories.
Fear index is at greed. That's not my fear index, but I'd say a little bit like that. Randy, get it? Okay, here we go. Right now, we got one.
10 seconds. Build of 17.423 million. That's a build of 17.423 million, higher than the expected draw of 1.8 million. Gasoline inventories was a draw of 9.68 million, a draw of 0.968 million.
I gotta pay attention here.
Higher than the expected draw of 1.1 million. Distillate inventories, a draw of 0.01 million, a draw of 0.01 million, higher than the expected draw of 2 million.
What was my entry?
Cushing inventories was a build of 1.66 million, a build of 1.66 million. So we saw a wick to the downside in the WTI crude futures there. As again, crude inventories came in at a build of 17.423 million on the expected draw of 1.8 million. Keep in mind last night's API did also see a large build of around 9 million as well. We posted the weekly EIA inventories reports on the feed for those interested.
Oh my God, that fucking sucked.
Trump posting on Truth Social says the US has total control over the strait. I think we will keep it. A naval blockade is being called by everyone a wall of steel.
No, I don't trust this at all.
Also talking on Iran's economy, just saying that it is shot. And again, the US has total control over the Strait of Hormuz and he thinks we'll keep it.
I'm gonna get out of it because I don't trust it. I got out. I don't trust it. Let's see, I lost, I think $60. Yeah, I lost 60. That ain't bad. But I don't trust it now. Right when I bought it. Man, if I'd have just waited 3 seconds. $55 is what I lost. That's good. Minus 55. That hurt. I mean, it didn't hurt, but that just kind of I'm tempted to get a put, but I don't know. The numbers were good, but the Wall Street sucks. These fat cats, they're very bearish. So today we got Yogi, Sweet Tangerine, Positive Energy, brought to you with Washboardjim. Tempting to get a put. Man, that was looking so good. We're not on the 2-minute SPX. I still ain't touched it yet. Look at that, right to the 200 on that trade. Oh, I should have pushed the add button. I didn't think about it. Oh, that was perfect. Man, that would have been a smart move. If I'd have been, instead of worried about getting out of it, if I'd just pushed that button on the 200. That could have been a present, a gift. So I lost 55, YouTube, I lost $55 on that last one. And right now it'd be a lot worse. It'd be like 100, 200 almost.
EIA reported that US crude stockpiles rise in the latest week by the most since January of 2023.
Oh, that reminds me, I told that guy I was going to go up there Friday. Well, that kind of fucked up my plans. No, it didn't. It'll work out just great. I won't be here Friday. You buy me a lawnmower. I got one, but I got to buy another one. I'm going to get that out of the way. You still bullish on SPX? Well, we got to break this VWAP. I sold it at 645. We're squeezing again right here. I don't know. I can't be too bullish on that last candle. We're at a head and shoulders right here. Well, I was down 250 on the trade. Just like, boom, right when I bought it. Ugh. It was a good spot to buy, too. We're above the 10 now. Inflation was 3.4 in July, down slightly from the previous month. And they're still crying.
US Gulf Coast crude stockpiles rise in the latest week by the most since January 2023 as well.
GME was down low yesterday. It's a cult. Oh, God, down again. Down again. Are you still in him? Weren't you glad, you Ruffle, that you didn't get in that trade, man? That would have killed you. Three white soldiers. Oh, you got white. Oh. Spank. I knew something, felt something was not right, but. GME has a triple bottom on the day. We're back to the VWAP. I'm gonna go start lunch. core inflation was down, so the market should be bullish. All we've heard from these fat cats is inflation, 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 inflation.
The EIA also report that US net imports of crude rise in the latest week to the highest since June of 2025.
It's for the smaller yard where my trailer is. We're above the 200 here. Randy called the reversal. Let's give him an A+ from the bottom. That's 2 days in a row. That'd been $100 right there if I'd jumped in when I did. 130, 620 to 750. What, 303.87 again on Apple? Or 30, yeah, 303.70 maybe. So we're bullish. I'm going to set my alert here on this expansion where that candle is and that one right there. Man, my timing, just 10 seconds, 2 or 3 seconds, I'd have had this killer trade right here. Triggered. Okay, I got one. Let's see if we hold here. The 77.60s. No, not again. Now I'm below it. Fuck. Now we're under the VWAP, so this ain't looking too hot. We're bearish. We're under the VWAP. More drama. One, two, three. Symmetrical flag. We're coming back down to the 200. If we don't hold this. I still don't see their logic with wanting to raise rates. You got a little doji there. Yeah, something ain't right. It's going to come down to the 200, 7736. Seven seven three six. We're definitely bearish now.
US imports of crude oil from Venezuela rose in the latest week to the highest in September of 2024, according to the EIA data going back that far.
Oil in Venezuela. There's nothing holding us up right now. We got more drama coming. But I get these at. Got an inverted hammer. I don't know if I like that yet. Tempting to get out before it gets worse. Up. We're at resistance. Three white soldiers. We're right at resistance to break. I don't think it wants to do it. being hardcore. I didn't think it wanted to do it. More drama. Still getting a little mixed signals. We got a Head and Shoulders. Got a Head and Shoulders right here. Snake. The only pattern out of the snake right now is in
Tasman News Sergeant Ansar Allah says we will target any Israeli presence in Somalia and the region.
Oh, you will. Fuck you. Let me get out of this sucker. I'm out with a loss. The 1 minute, I'm going to set an alert at the 200. And I'm going to set one at the 2 minute. We got 334 and we're at 290. No, that'll work. And we'll move these up 77.50. It's all about oil with this guy. I'm gonna go through my watch list, see if I see anything. We had Kava today. I got my alert set for 773838. We're still bearish. Break this, I'm gonna get in it. Two minutes still very bearish, so I'm not going to get in it. I can't believe I got stuck in that thing. SNXX 1160, STX up $63, Dell up, Marvell up, SpaceX up, AMD up. Still bearish. Ain't been that bullish today. The market hasn't. Man, I made that soup way too high. We got a fallen wedge here on SPY.
The VIX briefly hits over a 7-month low, last down spot 44 points at 14.84.
We got the 20 right there. We're still bearish. We're squeezing. We're in between them, but not got. Don't want to pull a trigger yet. If we do pull a trigger, be worth a couple hundred. Next time I'll watch how much pepper I put in. Is pepper good for you? Raising up my resistance just a little bit. This has proved here to be the hard resistance to break. Gosh, that's spicy. I didn't think pepper could do that. Yes, pepper is good for you. Whether you mean black pepper, ground pepper, or fresh bell pepper, these common foods add great flavor and helpful nutrients to your meal. Very few calories. Fights cell damage. Acts as an antioxidant. Helps your stomach. It can wake up stomach acids. That ain't no shit. It's waking up my mouth. Still ain't doing nothing here. So I've got caught in 2 trades today. about a 2. Oh, that was a tough one. I'm gonna eat every. I got 8 of these, 8 or 9 cans. I got to eat. Right when it starts to cross, it just kind of chickens out. So we got every bit of this here support level to hit. Meta trying to do a reversal here, trying. Microsoft a double bottom. Now on the 2-minute, we're bearish because we're above the 10. So you could scalp it within and get out. What are airlines doing? My buddy's still on there. I haven't heard him in a bit. USA has total control of the straits, Donald Trump says. It's not what we're hearing. Low volume. Some people don't even trade on a day like today. My eyes have seen the glory of the coming of the Lord. He could scalp out the puts till it hit 77.39. I want to see how my throat can handle this here shit. You ever made anything that you just didn't want to throw away? Not too bad. Prepare ye in the name of the Lord. Are we going to hold that trend line? So I'm going to take a squawk at it. We got a double bottom here. I'm going to grab one. The 7750s at 510. $77.50. $77.50 at 510. Having a hard time deciding what to do. Not sure. I'm not sure. I'm not sure. Not sure about this one yet.
A source to Al Arabia said that mediators need additional time to process the stuck files between America and Iran.
Oh, God. I wonder what the fat cats are talking about today.
SpaceX AI said they're introducing Grok 4 6, according to their website. So also hearing from an informed source to Al Arabia that the optimism on the part of the Pakistani mediators regarding the extension of the 60-day period.
Oh, really? Give me some good news, like, is Iran French kissing our butts? Yes, they are. I'm out for now until we break out more. Thank you. Now I'm only down 90. $5.10 to $6.11, $100 bill. My eyes have seen the glory of the coming of the Lord. I'm so fickle. Bug's heading out. Oh, got to take his mom to the doctor. So let's give Bug another prayer. Give Bug a prayer for his mama. Today, now she's going higher, and I got out of the trade. What's it at? I'm wearing a medium shirt today, folks. $6.40. Shut. $6.80. We break this again, I'll get in it. Will I do? No, I won't either. I'm not so close to the V-warp. This is a pivot point. We got support, 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 resistance, resistance, resistance. So if this breaks, it's going to automatically shoot up to 77.49.18. And the 9 is touching the 20. So that was a head and shoulders that I jumped in there. Did I put my win in the room? Yes. 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 Now we're starting to cross. What time is it? 10:32. I'm going to eat the rest of my corn that's in my soup. I make the best soup. This just had a little bit too much pepper in it.
Let's just keep in mind, we have already heard from SpaceX AI that they'd introduced the Grok bot and Grok Force Bot 6 to some of their higher paid subscribed users. Again, this was reported earlier in the week.
7th update. Inflation was 3.4 in July, down slightly from the previous month. And we were told it was going to go up and that we needed to raise rates immediately. I don't think people understand the bad plate that Trump got handed to him. The bloated government. How many? 38 million just in the IRS, or 68 million. Could go a little bit lower here. There it is, right there. Now, if we get 3 crows, there it is. Prepare ye in the name of the Lord. That was a big candle. A little scary. And very tempting to take. But I have control. Right about now. Okay. 470. We'll see if this holds. I'm in at 470. Position. If I get 10 to 20%, and we're at 470, it's 490. I'm just going to take little bits at a time here. I don't want to get greedy. I'm out. Let's see if I got 40. Oh, God, I got 28. $58. Shit. I wanted more. That trade I was in for, well, longer than I thought. No. How could I be in that trade that long? That's not the right one. Oh, duh. That was real stupid. I was in it for 1 minute and 4 seconds. And made $58. Now I'm back to even for the day. Options chain. What did I get out of that at? 428. 528. What did I get out of that at? 528. Now you son of a gun. That was a good one. Good trade. But not good enough. I could have got 20 more bucks. We're still bearish because the 10 is under the 20. So you got to scalp them for pennies. Ain't that right, Johnny? Say yes. Very good. I got a note I'm going to give Squawk, because I'm not best friends with these people. Not anymore. Squawk Box, well, inflation was down, proving fat cats were wrong. Wrong again. Fat cats were. Oh, we hear. AOC, run off with me and you'll never have to work again. There we go again. Randy. Randy. Got one. Put my order in here. What'd I get it at? $4. I got a $50 here. $4. Nope, 10%. That's don't want much more. 10%. We got to hold this here support. I got in at 4 and we're at 360. Get one more. And that's it. My average is 385. 385 average on the 7750s. And I'll put trim 2. And what was my average? 385. Okay, let's get a big old shot here. Got a hammer. Now I can get out of this trade right now, but I wanted to see if we got a gap up on that candle. Prepare ye in the name of the Lord. 420, I can take this and be very happy. Oh, no. Come on, get back up here. Give me 420. One more shot. A little more. Oh, shit. I didn't want that, but I got it. Okay. Penny scalps. Let's see what we got here. We got 410 at 370, up $80. 385. No, 385, 15, 25, $50. And I got out at 410. If I have to do this all day long, I'll do it. You can't stop me. Nobody can. Because my name's Washboardjim. I'm the founder of the Sneaky Snake trading strategy, where I wanted to get 430 and got 410 out of this trade. We're right to my resistance level right there. If we break, I'll jump back in. But that's the idea, getting this scalp with this hammer to the 10 and be done with it. And I was just a split second off of getting 30. 430. Just a split second. Right when I pushed the trigger, it dropped 10, 20 bucks. We got megaphone pattern is what we got. This was good call right here. Just a little bit too late. Pushing the trigger. So okay, that soup, now that I know that that's good for my cells and wakes up my stomach, no calories, pepper, I don't like. Last night, I cooked my famous chicken soup. Chopped up the chicken from the chicken coop. Spiced it all up with garlic powder. Threw in a little bit of onion powder. I chopped a yellow onion up. I chopped up some garlic, put it in a cup. The special ingredient is cumin. Little bit of salt and pepper is doing. I put it in my Instant Pot. I'm gonna eat it a lot. My chicken soup is the best. We're breaking the 20. Watch and let's see if it tests. I made some damn good chicken soup. Took the chickens out of the coop. It's a very good diet. Your tummy will really like it. Jim's homemade chicken soup. The chickens came from the coop. 733. SPY. Are you trying to tell me something? Well, we're at 771.70 and we got to break 772. Randy to 772.27 to 7759, 772, 773. I'm a chicken coop. And we got to break the 63 on the /ES. Here we go. Brandy to the VWAP.
So in 10 minutes time now at the top of the hour, do you see the release of the WASD end stock numbers? Corn end stocks forecast 1.737 billion, on the prior 1.79 billion. Cotton end stocks forecast 3.99 million, on the prior 4.1 million. Soybean end stocks forecast 300 million, on the prior 310 million. Wheat end stocks forecast 720 million, on the prior 722 million.
Oh, really? Is that a lie? I'm going to rearrange my boys so I can feel comfortable here. Well, she decided to drop. You can't trust nothing today, Randy. This was where I exited the trade. We're back at 4-minute support on /ES. I think I'm going to go make me a cup of coffee, or should I wait for this trade? If I can get Nancy off the toilet, I'd have her do it. Angel, do you ever have a problem with nose hairs? No, sir. Angel. Not that much. I got a nose hair that's itching. I don't know if I should pluck it or just let it hang. It's about a ½ inch out of my nose. Maybe 3/8 of an inch. There's nothing on the other side. Oh, I gotta go pay for that. Oh, I'll do that after close, and then I gotta make arrangements to pick up a door. Well, frick. I don't really want to buy this right now because the 9 is under the 20. And every time we bounce up, it just pulls right back down. And we're just so close to the VWAP on the /ES. $5. And we haven't respected the 63 yet on the 1 minute. We are going to squeeze here. We're between the 9 EMA and the 63 EMA, the old Jim. And the new Jim does not want to take the trade. Not until we get down to the 200 SMA. And then go long for the rest of the day. And I think I will go into the kitchen. Core inflation was down. Let's see if I got any response here on X about my Squawk Box. Yes, I did.
So in 5 minutes time now, at the top of the hour, we do see the release of the WASD end stock numbers. Corn end stocks forecast 1.737 billion, on the prior 1.79 billion. Cotton end stocks forecast 3.99 million, on the prior 4.1 million. Soybean end stocks forecast 300 million, on the prior 310 million. Wheat end stocks forecast 720 million, on the prior 722 million.
They're at 4:30. I'm not going to take it because I don't want to. Not going to go against my rules. They've been established. I've got rid of all my losses today. I'm back to even. Maybe a little better than even. This is a descending. We got lower lows, got a wedge on the 2 minute. In the 1 minute, we're about ready to cross. The 10's about ready to cross. And on the 1 minute, we're at the 200 with an inverse head and shoulders with a symmetrical flag or a wedge. A symmetrical flag. With a 1, 2, free, 4. And we're at, oh shit, I should have took it. That would have been a good trade. That would have been a good one. We're still here under the 63. I mean, that thing has to break that before I jump in. Did anybody like my chicken soup sandwich? I mean, my chicken soup song? Nobody liked it? Who's Randy? Randy is my best friend. He's a guy that's in the room. When I see a good trade coming, I yell out, Randy! That's kind of like to you guys on YouTube. When I say Randy, that means you need to be watching the screen.
1 minute now for the WASD end stock numbers. I'll lead with the wheat end stocks.
So, anybody that's new to the room, Florida money, 16th Avenue has no idea what they're missing out on. When I say Randy, it's a buy signal. And we just now crossed, well, that's the 1 minute. We're still in a symmetrical flag here. So this is what you got to do. You got to take your trend line.
10 seconds.
Run it across the body. Then if that breaks, we got a triple top right up here to get out of the trade.
So the wheat end stock 717 million, which is lower than forecast, 720 million. Soybean end stocks 320 million, higher than forecast, 300 million. Cotton end stocks at 4 million, higher than forecast, 3.99. And corn end stocks at 1.65.
Kind of wants to do it. There it goes. Shit.
5 at 3 billion, which is lower than forecast, 1.737 billion.
I missed it. That's a right. Ooh, wow. 4 to 510.
And that was the end stock report is on the feed now as well.
Well, that wasn't meant for me, but I missed it. $4 to 5 right there. Damn. We're now bullish. That 10 crossed the 20. And we'll create an alert. And we're still under the VWAP. Man, that sucked. Inflation reading buys the Fed more time to defend its forecast. Finally, someone with some common sense. So that's one thing that I think these traders can't do anymore. The fat cats. And that's what I've taught myself, is to predict the next move. They rely too much on the Fed, and you really don't need to be relying on what the Fed says. You should already know. I never really did make that a big deal, unless it was on FOMAC. Dadgummit, Randy. At $160 a contract. $200 contract there. Yeah, me too. We're going to see if it wants to respect that rising wedge. That's where I'm going to jump in right here. And if it don't work, I'm going to get right back out. So I got it. $5. $5, 7/750s. This is scalp, not. Oh, I'm in the wrong one. No, I'm not. What'd I get? Oh, okay. I'm going to scalp this fast because I don't trust when you're up here in this level. I don't think it's got a hold. No trust. I haven't trusted or heard anything today. It's not doing what I want here. Just one little bump. It'll be cheap. Give me $50. Yeah, I'm not trusting this, Randy. I'm going to get out of it. Daggum ya. Hold that 10. I almost bought another one, but I didn't. I just held off. La 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 la. Position. Close limit. Yeah, I think I'm going to. I don't trust it. Watch it pop. I'm out even. I'm out even. Oh, I made $2. That's the biggest one of the year. Oh. AOC, will you run off with me? And you'll never have to work ever again. Damn it, and there she goes. I do. Oh. That's my luck right there. Could have made 30 at least. Well, we got it. Resistance again. I feel stupid for not getting out. We're at that pivot point. We just can't break that pivot point. I was kind of hoping we'd have done it there, but I should have stayed in the trade because we're still above the 10 and exited right there and made at least $30. But now you're at a resistance. I'd made 60, 80. No. God darn it. Damn it. Oh, that sucks. Does anybody know what I just did? I got to where I couldn't read it anymore. And I wanted to readjust this pivot point. Got a wick, body, wick, body, body. So that's the new resistance right there, if that breaks. And I'm going to set my alert at the mark at or above. And that's the resistance I want to try to break. I'm just watching paint dry right now, because nothing's going to happen until we break this VWAP on the /ES. So I'm going to go in there and make a cup of coffee. I got this, I can hear this trigger, then I'll run right back in here, which everybody should be setting alerts. It just triggered right now. What's a bad one? Randy, you still bullish? You sold them? Ooh, Randy. Randy did take the trade, and I chickened out. These are at 620 now. That really pisses me off. See, we got the, you want to set your alert, maybe right there, or off the 10, and use that body right there. We still haven't broke the VWAP on the /ES. So you got a hammer. This is bullish. These are called 3 white soldiers. Hammer, hammer. Inverted hammer is a sell signal. You want to bring your alert above the 10. And over here I have the /ES, and I use this to trade this. If that /ES breaks that pink line, that's the VWAP. This thing will break out too, which it just did. Still ain't broke it yet. Damn, that's a tough one. So these Kool-Aid drinkers on Wall Street been whining about inflation, and I haven't seen any, and it's down again. I doubt if I get a response on X. They should start responding to my messages. You want to go ahead and draw this here trend line down through here. And you want to, like, if we do break this, you want to do these horizontal for resistance levels. And right here, you have an inverse head and shoulder, you have a head and shoulders. Two-headed snake. So you want to put that there. And that's a solid resistance to break. If that breaks, it's an easy shot to right there. You hear me, Randy? We're at a hard resistance. If we break it, it's a pretty good jump. $77.53. So you people on YouTube see that? That's called a head and shoulders. Left shoulder, head, and right shoulder. And that's the second right shoulder. So if something's going to break, it's going to do it right there. And that's called a hard resistance, because you got your pivot point and you've got your two-headed snake. And you got to break the VWAP. If that breaks, then this will automatically shoot up to here. And I got that on the 1 minute, and this is on the 2 minute. I'm gonna see if it's raining out there. I doubt it. I'm gonna get me a lawnmower. I don't want a big lawnmower. I want just a small one. They can get an acre cut a day. Maybe 2 acres on a cool day. Shield or the Shield HD? I might get this one here instead. Really, really strong lawnmower. It's just kind of, here we go, get ready. That was kind of like a little boost right there. Randy? We're at the 200 right here. I don't want to throw this kind of money in here, but $620, $600. Still haven't really broke the resistance yet, but we're getting there. Something's happening here. Oh, I need to put my buy order in. It respected the 10. And this is the 200 SMA. Still ain't bought it yet. I'm gonna go make my, now here it comes. This is the squeeze. See how it bounced right in between them two trend lines? See, we bounced here, we bounced here, we bounced here. Oh, here it comes. Now the question is, does it have the mustard? I really don't want to. What time is it? 11:24, 12:24. Fat cats are at lunch. Here we go. Boom. Still ain't broke the 200 yet. There's a lot of fake. This is a fake out. If I ever saw one.
The US ITC institutes a Section 337 investigation of certain.
Samsung.
US ITC is saying Maxell alleges Samsung infringes on mobile device patents.
Yeah, I mean, I can't make up my mind on this. I can if that thing breaks. How's the VIX doing, Randy? Oh, switch devices? No switch. VIX is staying down. Well, this thing's going down too, right about now.
So we have posted out that article on the feed for those interested.
Oh, really? We're at support. Are we going to taste it? Let's see. I got one. Look at the 7750 at 550. Options chain position. I don't think that choose your bottom. Up. Hold on here, Jimmy. Might not be a good idea. About the way I felt about all my trades today. Heck. You're not doing it. There, that's not good. Tempting to take just $100 loss on this one. think I'd want to add. Got it in at the wrong time, that's for sure. All that weight. Tweezer bottom. The only thing keeping me in this right now. Yep. How many do I have? Now. Being a cotton picker. I'm getting out of it. I don't trust it. I'm okay with that. So got 550 out at 483, about a $60-some loss. Shit. No. Fuck. Can you believe that? No. That sucked. Unbelievable. That was my first foul up. 620. 3 black crows, inverted hammer, higher lows. Should have stayed in it. That gum. I'm gonna go make my coffee. Fuck. That hurts. That'd be up $100. And that's the way it's been today. We're past the 200 now and the VWAP. Burundi. There's 100. I'll be right back. That gave me a headache. That was a fast headache I got on that one. Gosh. I put that in the wrong cup. That hurt. I mean, I had that thing perfect. 3 black crows. I was looking at that megaphone. It kind of had me going, maybe think we're going to pull back that 7737 and run it the rest of the way up for the rest of the day. See, here's a megaphone right here. Do you see it? I took the guts to get it in the trade. I should have stuck with it. Damn, that hurts. I mean, I'm just thinking about it because I really was trying hard on that trade. And I had so much patience. And all the time it was telling me that was, and then it pulled back. And it got me nervous, but we held my support. And then it finally broke the VWAP. Now the 200 SMA is going down. So that's still a sign of bearishness. Oh, God, what a... Ugh. That spoon, I've been stirring coffee with it for like a week. And it's got... Ugh. This will be my last cup of the day. And then yesterday I got in my sweatsuit and I started jogging up the road and I was acting like Rocky. I had my hood on, you know, and people were honking and waving at me. And then I stood at this, here we go to the VWAP. Now we're going to retest the VWAP here. We're at 570. Back to the previous resistance. We're above the VWAP, Brandy, on the /ES. Bounced right off previous resistance.
You've reached Stefan with Junk of the Trunk Transport Services. I'm sorry I was unable to answer your phone call. If you can leave your name, number, and a brief message, I will get back to you as soon as I can. Thanks, and have a great day.
Yeah, my name's James Howard. I need someone to pick up a door here tomorrow. If you could call me back at 417-814-0672 and deliver it to my house.
So in 10 minutes time now, at the top of the hour,
My name's Jim.
selling $42 billion in 10-year notes. The prior high yield was 4.58% and the private to cover was 2.59. So today, Treasuries hold small gains following the benign July CPI report, trimming the expected yield of this $42 billion 10-year note new issue auction coming out soon. It's still on track to be the second highest yielding 10-year note auction since 2007 though, after rising oil prices and mounting expectations for Federal Reserve interest rate hikes have propelled yields to year-to-date highs at the end of July. There's also a 30-year new auction on Thursday, which is poised to draw the highest yield since around 2001. So with this 10-year note auction, JP Morgan strategists in a late Tuesday note predicted a smooth reception for the auction based on the high level of outright yields.
Yeah, look at her go.
Being offset by a challenging macro backdrop.
Randy. I called it out, that's for sure. We hit the first resistance. Three white soldiers. We came back and retested that VWAP. Yeah, hello. My name's Jim Howard. Do you do small deliveries?
Yes.
Like a door?
What's that?
Do you do small deliveries, like pick up a door for me and bring it to my place?
A door?
Yeah.
Yeah, we can.
But that's not your thing.
Not really, no.
Could you lead me to somebody that would do something like that?
I couldn't tell you right now.
Okay. Well, have a great day, sir.
Thank you.
Ed Scott, you suck. A door. Your job's to deliver. That's X. No good. Well, shoot. Now I'm triggered. I don't know what to do. We got a double top. Got an alert trigger. Shop. Shop hit my support. It's been a while since I've alerted that one or put that up. That sucked, man. I really was working hard on that trade. Chop had a big breakout on earnings last week. So inflation's down. I mean, that's a good reason for the market to be looking good, but you listen to the fat cats, they don't like it. Pawn's down today. PANW.
So we are now 5 minutes away from the top of the hour. The US is due to sell $42 billion in 10-year notes. The prior high yield was 4.58%, and the prior bid to cover was 2.59%.
Okay, here we come back down. We got double top here. I'm going to put it right on them wicks. Small delivery service, carrier service in Springfield, Missouri. Oh, I can call my buddy. Let me call that other guy. 417 moving and storage service. DRV and delivery service.
One minute now for the 10-year when issued yield.
Okay, we're at support right here. If this wants to stay bullish, we had our chance right here and I didn't take it. We're back here again. And we're under the problem is we're under the 9 EMA there. So Drew's junk away. Drew's junk away in Springfield, Missouri.
The when issued 10-year yield 4.682% ahead of the $42 billion auction. So again, when issued yield 4.682%.
There it is.
Hello?
Yeah, is this Drew?
Yes, this is Clay. I'm Drew's business partner.
Oh, Clay, yeah, we spoke, well, we didn't speak, but we messaged each other back and forth on Facebook about moving some junk.
Okay, yeah, it was probably a conversation with Drew or maybe one of our appointment setters, but go ahead. If you would, just give me a quick recap so I know.
Yeah, what I needed, I bought me a door, and I need someone to go pick it up and deliver it to me tomorrow, and I didn't know if he was into that or not.
Typically, that's not something we normally do.
Yeah.
It's possible. I think tomorrow we have mostly booked out right now. What time were you needing it
Tomorrow or Friday.
delivered?
10-year high yield of 4.683%, 4.683%, with a bid cover of 2.53, 2.53. So the US sold $42 billion and awarded 65.27% of bids at high. Primary dealers take 8.6%, direct 14.7%, and indirect 76.7%. So the US sells $53 billion in 10-year notes.
I don't have a price in mind. It was something $60, $70, maybe $60.
Okay. I'll try and run that by them real quick and see if we can't figure something out on that.
Yeah.
And I'll let you know.
Well, I do appreciate that, sir. And it can be done Friday too.
Absolutely.
It can be done Friday morning too,
Okay.
before 5.
Okay, cool. Alrighty, well, I'll get that kind of relayed down the road and see if we can figure something out for you.
Well, I really appreciate it. It's kind
This
of
is
in
10.1 basis points.
a spot.
I understand a little bit of a pickle, I get it.
Okay.
I've been there.
Well, thank you very
I've been
much.
there. So, thank you.
Yep, bye. But start me a business. delivery business.
The Treasury 10-year note auction draws highest deal since 2007.
Carrier delivery service 1 day response time. Medical carrier, that ain't what I need. One of them kind of slow days, man. I missed a good trade right there. It was about $300. And that one there was about 180 off that candle to the top of that one. About 100.
US Treasury yields largely unchanged following the 10-year note auction. 10-year yield off 1 basis point at about 4.67%. Boom! On SPY, we just now hit the double top, triple top now, really. Springfield Mobile Home. Let me see here. Fuck, I can't remember where.
Springfield Mobile, this is Brandon.
Yeah, my name's Jim. I got a door up there waiting for me. What's your address?
1828 East Division.
1820.
8.
Okay.
1828.
Oh, 1828. West Division.
East.
East.
Division.
East. Shit. Excuse me.
You'd be on the other side of town.
Yeah. Okay. 1828.
Yes, sir.
1828 East Division.
You got it.
Okay, thank you.
Yes, sir.
$18.28 East Division. This fucker's been doing. To 2320 Ingram Mill Road, south of Sunshine. Okay, we're pulling back again. Now this is a double bottom on that support. The place is Springfield Mobile Home Services. Here we are back in that same pickle right here. SMCI is breaking out. This is a pretty thick wall right here. We're getting ready to squeeze again. I don't know if it's going to be down or up. That's a spinning top. We're off the... And the 63 held up on the slash ES. 10 bond auction, maybe some reaction. Yes. Arm, that's, I was getting ready to say that earlier. I knew a guy that used to trade on the hour and half hour mark. Ooh, that's a big one. What's a big one? Coming back to the VWAP. We're back to that support line. And we're back to the VWAP on the slash ES. 550, 560, the 7750s. Wonder if it's going to hold here. We're definitely at support, Randy, right here. Room. Magnificent run, dude. It's this or we drop more. And right now we're under the 63. And we're above the support line, but we're below the 20. Oh, my tummy growled. Anybody's tummies growl? They're usually full of food. It's going to be one of them trades where I jump right in and it tinks on me. We got a hammer and a tweezer bottom. And the VWAP. And we're squeezing. And we got a 1, 2, 3 on /ES. Randy's on a roll. I'm waiting. I kind of like it here, but got a upside down dragonfly, morning star on the 2-minute. And we got 3 little bitty white soldiers trying to break the 9 EMA. I'll be right back. I think I'll just buy that door and wait. Not take the delivery. I mean, this is a real nice setup here. And there's that Head and Shoulders. It could be a little bit stronger, so I'm just going to wait.
Onto the globe, Canada weighs a proposal on auto tariffs in US talks. So the Globe and Mail, Ottawa weighs proposal on auto tariffs as it presses US for reprieve.
I don't know what you're saying. You got to talk a little bit clearer. It's so solid.
Further detail from this, and the proposal would also maintain an exemption for the value of American content in cars exported from Canada.
CPI comes in as expected. That's a lie. That's not what they were expecting. They were expecting an increase, not a decrease in inflation. Man, that's a big old head and shoulders right there. Just so many things in the way here. We got the 10 crossing down the 9, and we got a head and shoulders right here. It doesn't want to break. Yeah, fudge. Yeah, we didn't lose power. She held. She held the pivot point. We actually had 2 of them. It seems like the 2 minutes are a little harder to read than the 1 minute. We had 3 white soldiers right here, so that's a leading indicator. And we're coming down to a triple bottom. I'm going to thin these out because you're getting a little bit too big. Shit. Missed it. Like 520, I wanted bad. It's 12:30. Okay, I got one. 510. The 7550s. Oh. Man, I sold it. $5.10 to $5.83. It's kind of weird having this all scattered around.
Sources here, Google co-founder Sergey Brin urged staff in recent months to focus on bringing Gemini model back to the frontier of AI. Google execs convened an all-hands meeting last week to address AI unit reorganizations amidst staff concerns. Just keep an eye on the Alphabet shares. Did see a little bit of a rise there off of the back of those headlines.
$5.10 and $5.83. You gotta be fast. Earlier, I had a 250, 300 on these 3 white soldiers. So let me kind of clean this up here. Let's get a bigger chart. You can see it better. So you see this right in here? It was triple top and it pulled back and created that megaphone. You had 3 black crows bounced, 3 black crows bounced. Then it respected the 200. So this is a pivot point. You could see where it come up and found resistance on this here triple top and found more resistance, and then it broke out and respected that previous resistance. So when we pulled back here again, it respected that previous resistance, and that's when I took the trade off them 3 black crows. Boom! Three black crows. If you look and Google it, it'll tell you that it's a continuation of a bear flag. But in many cases, I take the 3 black crows and whatever candles next to it. This case was an inverted hammer, and that's inside that crow. Then this body respected that previous body. Then you had the 10 crossing over, and this is on the 1 minute. The 10 SMA, this is my new strategy that I'm trying to pick up and learn real well. I have a feeling it's going to pay off good when we ever get in a freaking decent market. I can't do it for $100. He wants to go pick up that door and give it to me for $100. I'll just stand there and wait for an hour and a half. 2 hours. Make sure my phone's charged. Might get a haircut even. I'm going to just tell him I got a friend that's going to do it. Thank you very much, but I got somebody that decided they'd help me out. Friend of mine. I ain't paying no $100. That fucking market of $100. Let me see. Probably cost him, I'd say 40, 35, cutting $50 maybe would have been decent. $100? No way. Plus you had a triple bottom right here. Three white soldiers, 3 black crows. That's pretty, that's a clean chart. Here we come again. Eventually this is going to give up. Don't you think? Because Wall Street doesn't like what CPI. They want to wait for the PPI, I think it's tomorrow. And what I read on the CPI, it was all good. And it wasn't what they expected either. It's what I expected. As point of control. Oh, ARM, that's a good thought. It held the yesterday held that support. Well, I'm going to clean this chart up. Use thinner lines. Start fresh. Zoom out when you're in doubt. Thanks for bringing that up, Arm. Zoom out when you're in doubt. Yeah, I'm going to cut back on coffee drinking, I think, for a bit. I'll be right back. I think I got one junior mint in there to eat. And a banana. It's called a cup and handle. Today's pattern. You got a cup, and this is your handle. That's called a cup and handle. That's on the 1 minute. Let's see what a 2 minute looks like. Here's your inverse head and shoulders. What the fudge? I gotta get, we bounced off that 200. That's the one I really missed right there. That's an inverse head and shoulders. That's a cup. That's a handle. We could end up here. 77.57 something.
An Iranian security official speaking to Al-Mayadeen stated the Strait of Hormuz has not been reopened, and Iran has not made any changes to its policies and regulations in this strategic waterway.
Now drop.
Silver volatility index falling below 15 to the lowest since January 9th.
Iran. Trump says it's open, Iran says it's not. I can't believe either one of them.
So the Iranian source speaking to Al-Mayadeen warned against any ships that violate current Iranian regulations and guidelines in the Strait of Hormuz.
$100. If you'd have said 80, I'd have said, come on, do it. I'm just having a truck. Well, the lottery is $1 billion. Come on, Pokey. Trump, U.S. total control over the Strait of Hormuz. I think we will keep it. U.S. CPI comes in as expected. Another lie. They might have thought it was. Oh, God. I'll go through the watch list. I better watch mine. We're at 510 on them right now, 520. The 7750s. We got the 10s crossing over the 20. Two, four, how long have we been here? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 22 minutes. Damn, it's warm. Okay, here we come. If you can count to 4, we might make a little bit more. The 7750s. We got a double bottom.
See here reports from Al-Haddad, a Yemeni armed forces drone strikes target Houthi gatherings in El Jaf.
Uh-oh. Is there a war, more fighting going on? The Houthis? That's about the time that candle comes. I got a delay on this news a little bit. I'd be careful here. See if we hit my support. I might get one. I'd like to see it come down below that now with that. And we got an inverted red hammer. I'll grab one.
At 2 p.m. Eastern time, we get the US federal budget balance forecast minus 346 billion, prime minus 120 billion.
Triggered. Triggered. 77.50's at 480. I'm up 8%. Ah, bitch. Now it's hit resistance on that big candle, not much of a gain. I don't trust nothing today. Let's see what I got. Probably not enough. 480 to 543. 480 to 543, big one, man. SPX 7750 calls. I was in that one a minute and 11 seconds. $480 to $543, a big whopper of $60. Space on a roll. I heard that Elon's talking about AI making profit, Sergeant, in September on AI with SpaceX. Am I right? Who, me? What happened? We get a big bounce? Oh, shit. $5.40. Rodney. You wait. You just wait for me to cry, don't you? You love to hear that. I bet your wife's back there cracking up. He's a pussy, ain't he? You see why I sold now? I don't trust nothing. Not if the Houthis are into it. We're back to the V100. Oh. Friday is your wife and I's 39th anniversary. Happy anniversary to you. I want to sing a song. Oh, Brandy, we're coming to my support. If you can count to 4, you might make a little bit more. Or is the Houthis going to scare the... We're at the VWAP. I don't know if I want to take this risk or not. This is not my favorite time of the day to be trading. Oh, that would really do it for you. You'd be sleeping in the garage. If things get bad, you might want to buy some Walmart. Well, I don't know if you all knew this or not, but I decided to do something. I asked the WNBA, after long deliberation, I believe I will come out of the closet and enter the WNBA draft. I meet all qualifications. Thank you very much. I'll make you very proud, I promise. None of my liberal friends responded. "98% of my friends are liberals." That sucks, right? Woo! Well, we're at the bottom of the megaphone. Now, what is all this jigmarole? I bet you one of them's the SMA and one's the EMA. Or that's the SMA, 50 SMA. Oh, God. Jim's setup. The green one. Yep, that's the SMA. That's the 200 EMA. And that's the 200. And this must be the 63. I don't see the red one in there.
Federal budget balance coming out early at minus 432.308 billion. That's lower than forecast of minus 346 billion. It's coming out early.
There's a $100 bill right there on that dip. $4 to $5. So you want to do your resistance? This is called a yin yang right here. We got that wick. This is a Darvis box. And this is called a quad, 1, 2, 3, 4. It's part of my trading strategy. One bits, two bits, and we see how that reversal right here with this hammer. It's a tricky day today. You don't want to take any risk. And you want to get in and out within 2 to 3 minutes, maybe even 1. Each one of these candles represent 1 minute. And I've been learning, see, we're come back down to support right now. On the 2 minute, we have a quad, counting the wick. 1, 2, 3, 4. So, I gotta tell Vegas something. I could do that tomorrow too. Oh, don't hide. It's really a boring day. Well, Friday I get a lawnmower. Biggin. I was going to get a Skag, but I don't want to throw $6,000 in a lawnmower. $7,000. It's a boring day. MU is doing good. SMCI is doing good. And we had Kava restaurant. They had improved sales. And broke all my major resistance levels or support levels. Kava. And GME is a Colt stock. They'll be starting to pump it. Boeing, I haven't looked at Boeing. Boeing had that engine deal, chassis deal on their planes, on their older models. Baba's got a double bottom. Baba looks interesting. SPX, are we doing it? Oh, shit, I didn't see that just till now. I don't know why I didn't see that earlier. So you got an inverse head and shoulders, symmetrical flag, breakout. Spinning top, inverted hammer. 1, 2, 3, 4 plus wick. Well, if it wasn't for those 2 losses, I'd be up pretty good today. It's kind of bullish right now. Getting a little bit of price action. And it's my worst hour. For that, I'm going to have me a cider. Here we go. My soul, I have in heaven, lay me down, lay me down. We're coming back to the right shoulder of the inverse head and shoulders. Things have been so tricky today. Question is it going to pop or drop? And this says drop. We're right to the right shoulder. This is the sweet spot. But the way this thing's going today, I don't know if I've tested. Well, shit. I want to buy. We're getting ready to squeeze when your lower highs and your higher lows collide. That's called a squeeze. And if you start reading it more, you can see that it's happening. We got a doji and an inverted hammer and it's spinning top. It had been $20, $30. They're not paying nothing. And you're getting a lot of fake outs today. It's called a pennant flag. And it's a sloppy one. Let's say you took this trade right here, 3 black crows, and you get 3 white soldiers with a tweezer top, sell it. Could have got 50 out of that contract. I was doing push-ups on my walk yesterday. My chest is sore. Solid meat. Oh man, 540. Dadgummit. Randy. There's $100. Shit. I knew it was coming. Ah, damn. That looks so big from there. Oh, you cockroach. No. No. Squeeze came. I told you it's coming. If anybody took that trade, let me know. I didn't do it. Randy? Oh, I knew it. I got a headache. How dare you? I'm going to take a cup of baby aspirin. That would have been sweet. 470 to 670. $200. Make sure you drink enough water and you get up and walk around a little bit. That's called a pennant flag. Now you got a head and shoulders. That 1 minute makes it look really nice, don't it? So I couldn't draw that flag up with the 2 minute. It would look totally different. But I could have caught the squeeze if I used the 1 minute and draw that flag out. Is it getting darker? Oh, God. Beautiful triple bottom. I don't know why I didn't jump in that. The 70-60s at 120. Did you get out? That's a pretty shot right there. Okay. Okay. Don't say I didn't whisper in your ear. I can't buy it here. It's on 2 minute right now. Now I might be able to on the 1 minute. This is a hard day. Yep. You got to take that profit when you see it. Right now, are we going to hold the 21 of the 20 on this engulfing candle? Or is it going to knife to support? Actually, this is a support right here. I'm being very, very picky today. And the buy orders coming in. There's $50 right there. Usually they're not like this. YouTubers are a lot higher, but today it's just been very choppy. If you don't get in and out, that's about 50, 60 bucks right there, contract. Almost 100 now. I drink cider. It makes me a happy good fellow. I drink cider. Let's liven this up a little bit. Perfect song for right now. Nancy.
Nancy plays a game. Everyone loses
But her.
Nancy doesn't care. Nancy only wants oh, Nancy, she doesn't even see you. Jim's gonna shit on your face. Retail traders gonna shit on
Your face too, just for being you. Oh, Nancy.
Little people scream, but she can't hear in her tower. So high, it's all a blur. The pain below. Does she even know the damage done, or does she sleep so sound? Never a frown. Jim's gonna shit on your face. Retail traders gonna
Sit on your face too, just for being you. Traders gonna sit on your face too, being you.
just for being
Nancy. 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 You're doing what? You're not. Oh shit. That's good news. Oh, I love that. SpaceX. You're in? $760. I'd say you're looking good there, Randy. $2. Ching ching. It's almost 100%. Got a rising wedge. Rising wedge. Get ready to squeeze again. Second touch on that right shoulder.
Spot gold rises 1%.
Oh, what's the news coming up? Oh, I get it. Italian CPI month per month final. German HIV, German CPI. Huh. Everybody pulls out their CPIs. You got Italia, Italy, Italian, OPEC monthly report. Okay, we're below the flag now. This is an ascending triangle.
NYMEX WTI crude September futures settle at $83.27 a barrel, which is up 7 cents or 0.08%. Gasoline September futures settle at $3.15. Diesel September futures at around $4.30. Natural gas September futures at around $2.80.
Very interesting. And on the 1 minute, it is a head and shoulders with a rising wedge, an inverse head and shoulders, two-headed snake, or just a rising, or just an ascending triangle. There she goes. Oh. Ascending triangle. Randy. Damn, you're at 270. We have 3 white soldiers on the /ES. Right at resistance. Alphabet stock slips as Nvidia's $500 billion financing deal threatens custom chips. And they were pumping Google over Nvidia. Well, we nailed the VWAP today. The VWAP was very healthy today. Just stayed in them there. That'd been 100% trade. $120, 130%. Jim, you want to short it? I don't want to short it with the news today that inflation has lowered itself, and it's not what they expected. Damn, those things.
SpaceX shares extend gains to 12%, reach highest of July 10th.
We might. There's a pretty hard resistance. 7778.89 is what I have for /ES. And this is your next resistance right here, 7758.65. Right there, 81, 58.81. And they're never the same. Yeah, right there. We're coming in, boys, strong. We're coming up to resistance. I'm glad I didn't jump in them 75s. They didn't pay very much, but the 45s did. I mean, the 50s did. We're at resistance right here to break. Randy. We're definitely at resistance right here. Whoa. Butterball LLC. Always clean as Jim. You there? Oh, I got my A-lab on. Hello? You there? Hey, Butterball. No wonder I wasn't hearing it. I remember to shut that off. Okay. Well, that was a pretty dumb move, Jimmy. 3 white soldiers, consolidates, boom. On the 1 minute. I would have saw that breakout. On the 2 minute, I didn't see it. Yeah, I would have saw that on the 1 minute. I'm going to start using the 1 minute with this strategy and have the 2 minute on the side. Because I see a lot more on that 1 minute. A lot more action. I can read these candles better. Two minute would have been the triple bottom. And this yeah, 2 minute would have been kind okay. We're back at support.
Brent crude futures settle at $88.98 a barrel, up 7 cents or 0.08%.
Think so? And it's 146. ARM, were you able to get out of that? 775,881. No TV today. Oh God, Bob Iger, Josh Kushner to buy control stake in Los Angeles Lakers at $12.5 billion. Iger is a screw up. They'll be running around in dresses here in about 5 years. The Lakers will. I'd like to message him that. The Bulls have come around. Here comes the drop. They run all the way to the T, that's for sure. Now this is a true pennant flag right here. Boom. They're dropping it. What drop more is the question. And it's now 5 more minutes to power hour. So we got the hour clockage, as one would say on YouTube. 5 minutes. Less than 5. the 9's crossing down under the 10. I mean, the 10's crossing under the 20. And we're at the 63 on the /ES. That's the 1 minute. And the 2 minute, we're still bullish. I can't hardly see shit anymore. We got a triple top. Right there. Three more minutes to power hour. Did you ever get out? Falls below 10. Okay. You made some good money, right? I've got a support right here of 3 black crows, but I'm not going to mess around. Not into power hour. We could get some more drama. I've got the 200 here on the at 777287 somewhere in there.
According to IRIB, the Strait of Hormuz Waterways Management Authority says the Strait of Hormuz remains blocked and it will not be reopened until Iran's conditions are met.
And you bring that news out right now, don't you? So you can bring it down more. The demands haven't been met yet. Every time they ask for a demand, I'd throw a frickin' bomb on them. If we elect Democrats, they'll get billions to build more bombs. They said, not so fast. $140? Oh, Randy. We're back at resistance. We're back at the shoulder line. SpaceX is the frothiest trade ever and bleeds into other sectors.
According to CBC, Canada and the US are not yet ready to make tariff deal, and Canada is unsatisfied with the latest US offer.
Meta PR goes back on playing offense. There's a headline. Watch Meta to go long. I like that. Sometimes it just takes a headline to get me excited. I'm going to get some Meta. Well, I'll be watching Meta. This is the kind of one alert that I got off Oracle. When they said, "Oh, Larry Ellison's down like $50 billion."
Back mercenaries positions targeted in Al Mahra, Yemen.
Oracle, I mean, ever since they said that about Oracle, it's had one hell of a bounce. And I called this triple bottom out, went long with it. Triple bottom, and it's still reaching new highs. This is almost where the price of SpaceX was. And then they got Meta now. Look at Meta here. I'm going to clean this up, show you where this thing's sitting at. If we can get another 555.77, I'm going to set an alert right there. 561.56 to go long. And resistance to break will be the 21. Actually, right there. Yeah, I like that. It's 2:09, 3:09 Eastern Time. Whoops. Where are you tonight? Why did you leave me here all alone? I searched the world over and thought I found true love. He made another and you were gone, man. You were gone. Okay, we've had a knife here. And we go, oh, we got to raise that up a little bit. I had it at the VWAP, and then I just got through seeing that triple bottom, quad bottom. Oh, triggered. Triggered. We got another triple bottom down here. Oh, that's it. One of them kind of days, man. Not much of a spread. But this was a good run. And them spies I had earlier, God. Imagine what them went to. Here we come. I got SPY at 772.97 and 772.88. I'll be right back. Oak. We're going to pop back up. Lundy. Yep. Meta, we're going to go long in it once I hit my support. Actually, there's a spot right there. Might put in a resistance to break. Right here. I'm going to put a resistance to break, maybe catch it there. Can you dig it? And that's to the 100. And we're out of the cloud. So we got to get above the 9. Simple moving average. And that's perfect. Today I ain't made a lot of money. I made money, about 600, and 100 on my little challenge account, which I was up about 400. I was down. I was up. I was down, and I'm back up. But that could have been $1,000 at least today altogether. We got a fallen wedge. Okay, get ready. We're below the 10 on the 1 minute. Boom! Triggered! Triggered on the SPX. I mean on /ES. It's going to go down to the VWAP? I think so. End of the day, run off the VWAP. In the 200. And we got a triple bottom right here. We're about there. I'm wearing medium shirts. Look at my shirt. It's loose. This is where I want to keep my body at. Just a few more pounds less. Baba looks very ready too. We had a double bottom on Baba. Now the 1 minute, I wouldn't take this trade because we're below the 200. And I see that head and shoulders right there. Man, that would have been a good spot. But now we're below the 200 on the 1 minute, so there's no way I'd take this right now. And we got to. If I did get one, I'll just wait till tomorrow. Slash ES is at the 200 on the 5 minute. Now, what's the deal here? It doesn't say it on this one. Is that the 200? Oh, it might be the 63. It's a 63. Don't do it. This tells me to buy. This tells me not to buy. On the 1 minute, we're at the 200. We're under the 200. I don't want to take that under the 200 SMA. I just don't want to do it. It wouldn't be too smart. The 200 SMA is a major pivot point, resistance, or a support level. As you see it rising, you're following the trend. But as it starts to kind of level out, the trend changes. And I don't want to be, you're not bullish unless you're over that 200 SMA. You could take it and run it up to the 200 and get out. And we got the VWAP over here I keep eyeing.
So just a heads up, US Defense Secretary Hegseth is currently speaking. We'll get a video out for you shortly.
I wonder how hard it would be to start something like this. News channel.
So just making remarks at the America's Counter Cartel Coalition Conference. We'll see if there's anything else that he does say. Not saying anything much really at the moment.
I mean, I can barely understand him. I could get on there. Iran just bombed America. CPI numbers were better than expected. I need to rearrange my boys. Earthquake in Venezuela kills hundreds of thousands of people. Jack Frost will show up this winter. Jack Frost nipping at your nose, Yuletime carols being sung by a choir. I want 7750. Hormuz is closed. Iran will not reopen until they kneel down to their demands. Donald Trump just farted in the new ballroom. Randy showed up with a 1/4 ounce over at Washboardjim's house. Kamala Harris fell down drunk, face first. Socialist woman loses in Chicago. They had her lead by 22 points and she ends up losing. Are we going to break it? Are we going to break it? Nope. Not yet. Washboardjim tries out for the WNBA draft. Says he qualifies. What damn? How much? 77.45 puts? We're at a wall. Bug was trying to convince me to get a 60-inch lawnmower. You can't have any emotion when you're doing this job. And here comes the knife. This is what I've been waiting for. Look at that call you made. Beautiful. For that, you get an A+. Gap down. Get ready. Can you hold right here? It's now 234. There comes the volatility. I'm out. I'm out. 3 white soldiers. I'm out. 370 to 415. Oh yeah. $317. What was that again? 370 to 415. And it's now 238. Prepare ye. I'll get back in it if I have to. We're at resistance. Resistance, 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 resistance. Triggered. Bebop. And it's now 240, 340. I mean, this is where I'd want to get in. This is it. If there's any juice in this market, three black crows, three of them. Coming to the VWAP. I'll grab one. 270. Oh, that might have not have been the one. That's not the one. Oop. Okay, I gotta clear that. I don't think it's going to work. Now we're below the VWAP. I'm still close to the money, so I'll give it a little bit more time. We're still on the VWAP. back to even. No. Yeah. Jimmy. I'm out. I'm out. 270 to 345. I'll take that in a heartbeat. That's nice, actually. I got a power hour trade in. You got Meta? Good job. It looked good, didn't it? When you get a headline like that, I'd almost swing it. It's just like Oracle. Larry Ellison's down billions of dollars. They're letting you know without telling you. We're going to start throwing some money in here to help Larry out. And same thing what they're doing with Elon right now. They're pumping Elon up. Then you got Meta. They don't want Zuck to lose all that money. You got to pay for that CapEx. Okay, well, that was a good trade. I kind of wish I'd had 5 of them. So I went to about 6 in the hole to $103 in my new account, negative. There's, jeez, what's this? Now it's going to doom boom. 310, no, I'm still good. I liked how I got out of that trade. Quite impressed. Wow, 380. Back to the 200. It's a good call at the VWAP.
1 minute to go now to bring the market close. Imbalance data.
Imbalance what? The guy's kicking back, getting that news out, probably making 50 grand a month or more. It's a lot better than listening to CNBC, Squawk Box, and Marley.
10 seconds.
I just can't listen to him anymore.
Market closing balance S&P 500 sell side 1
God.
billion, Nasdaq 100 sell side 847 million, Dow 30 buy side 248 million, and Mag 7 sell side 235 million.
Buy side. Tanked on that news right there. I ain't getting in this thing, that's for sure. I heard if you spray WD-40 on your lawnmower underneath your thing where the blade is, that the grass don't stick to it. So I'm going to spray WD-40 on the bottom and on the top and kind of wipe it down real good. On the deck. One thing I don't like about this one I just bought is the back of the deck. It's got plastic. I can see that breaking. Like put a chippered away and put a, I don't even think about that. There's not much room, but I could. Here we're coming to the 200, and we got 8 minutes left. This would be the ideal trade right here. But he ain't done it. 3 black crows. They're at 90 cents. Just a big risk. And I ain't gonna do it. Oh, she's stepping down? Yeah, she got to take care of that baby. She has to take care of that baby. You got an A+. You probably got out of them. You got out, we'll see. Well, we got 7 minutes left and I got to pee. Wow, more drama. Trader of the day.
Dennis to go now to get earnings from Cisco Q4 2026. EPS estimate of $1.17, revenue estimate of $16.83 billion.
Right at the 200 on /ES. Damn. Look at that. Beautiful. In and out within seconds if I'd have took that one. I don't know if it had paid. Probably. Yeah, it would have. Oh, yeah. All right. Well.
Finally, going to get Cisco Q4 2026 earnings EPS estimate of $1.17, revenue estimate of $16.83 billion.
Okay, not a bad day. At the end of the day, brought me back up. Not very much. I mean, today was like a little here, a little there. In the trade I did call out, I didn't hold long, and it ran to $10, $9. So that's that. It's just hard when you're in this kind of market right now. You got to really pay close attention to where you are. I'm going to make sure I don't have any position here, because I'm... No. So we'll catch you later. Not a bad day. Patience. And then the put call was excellent. I'm gonna get out of here. And YouTubers,